To hear everyone, shall we begin? So now we are going to continue with capital budgeting. So we are going to start with the chapter capital budgeting. So with regard to the chapter capital budgeting, as I already said, please no noise. Let us continue and complete as many things as possible on capital budgeting chapter. Shall we? 20 different kinds of questions we have to do. Okay. All are expected questions for the exams, coming exams I'm talking. So please cooperate with me. Every concept we will do at least 2 to 3 problems. Totally targeted 20 to 24 questions we are going to do in this chapter alone. Clear? So let us start. Everyone have the question bank with you? I shared the PDF. At least PDF you have with you. If you want, you can take a printout, or if you want, you can see it as a PDF as well. Now in the class, you can see here directly. Question number you can note. At home, you can see the number and you can start doing it. Okay. Please concentrate. We are going to start. So capital budgeting learn. First expected area, like that if I not tell, I will tell you what are all the models that are there in your exam, techniques in capital budgeting. First one is called as ARR, annual rate of return, accounting rate of return, average rate of return, you can call it in any name. Already we have done in the last class. Logic derivation also I told you. What is the meaning of that half, if you remember by any chance. Okay. ARR. Next one, payback period we completed. No, we have to. Next one is discounted payback period. Number 4, NPV. Number 5, IRR. Number 6, profitability index. Number 7, MIRR. Number 8, MNPV. Number 9, EAB. Number 10 will be EAC. These two are one set. These two are one set. Both are not two different concepts. MIRR, MNPV one set. EAB, EAC one set. So totally if you take, there will be 8 different kinds of concepts we have to study. How many? 8. So totally we are going to do around 20 to 25 questions we are going to do only in this chapter. Clear? Big questions. All are 8 marks or 6 marks questions that came in CA and CMA examinations. Clear everyone? So to be very frank on how the question papers are coming, let me first put before you. Toughness point of view and valuation point of view. Because people will make their mind, whoever listening CA, CMA, anything. CA, CMA, how the FM question paper come. Let us say for example, if a question comes for 5 marks in CA, okay, same question will be given in CMA for 8 marks. This is how they are changing. Okay, because CMA follows a 7 marks and 8 marks concept. Next, when it comes to difficulty level of question paper, CA question paper, if it is said to be moderate paper or moderate plus paper, compared to that CMA papers, when I see FM paper, they are easy and dead easy. This is how papers are. When you compare with that, you can understand my point now. Means what? When you call, okay, CA inter FM paper, when you see, questions will come. When you say, sir, these questions are moderate, not tough, moderate or sometimes maybe beyond moderate. Then CMA question papers on FM, if you see, they are either easy papers or they are dead easy papers which come directly from the materials. Moral of the story, you can see the recent past percentage of CMA as well. How come 40, 45, 50 is possible if the question papers are horrible? Yes or no? So, point is, whoever listening to everyone, I am going to discuss at the level of CA only. Clear? Whether the listening person in online or offline or anywhere, if you are CMA, anyway we will learn at a higher level. So don't feel that these concepts, these are very big, these kind of questions will it come in exam. Don't put that doubt. If it comes easy enough, anyway you will solve. Even if it comes tough, you should be in a position to solve the answers. Clear, everyone? With this motive, we have to start. Point number 1. Capital budgeting, totally these are all the techniques. Whatever you are seeing on the screen. ARR, annual rate of return, accounting rate of return, average rate of return, or anything you can call. Next, PBP, payback period, discounted payback period, NPV, net present value, IRR, internal rate of return, PI, profitability index, MIRR, modified IRR, MNPV, modified NPV, EAB, equated annuity benefit, equated annuity cost. There are other concepts like capital rationing, incremental cash flow analysis, like that. These are all the techniques. Shall we begin? Yes, sir. Listen. Technique number 1, ARR. Just give me one information. All the live students, please confirm. Is audio and other things are clear? Who is that idiot? Okay. So now, leave. Not of our character. See. ARR concept, already notes was written. Notes was given. Up to, can you use the notes? Up to what we have completed ARR? Notes was completed. Okay, up to formula we have written, that's it. Problem we didn't do, correct? Sorry. Anyway, we are again restarting all the techniques. I will first explain about ARR once and then we will continue. Please see the screen. ARR, accounting rate of return, also called as average rate of return. Accounting rate of return, average rate of return. Let us understand. They say, normally, return on investment, the formula is return divided by investment into 100. Sorry, 100 you leave, return divided by investment. Please everyone, return divided by investment. Even ARR concept also same lines it will run. What ARR say? ARR equal to, what is this? Loudly. Now tell me. Whenever company take up a capital budgeting project, I repeat, whenever a company take up capital budgeting project, projects are done for making profits or losses are. Loudly. That profits are taken by debenture holders or equity holders. Who will take the profits? Yeah. Don't tell both, please. I will throw you outside. Not you. You can come. You can come. Why not? Please see here. I think I am more important. Please see here. Let them come. Please. Fast. Okay, now listen. Please. Sit fast. If that important work is completed, the least important work, that is class, I will start. Over. Santosh. ARR, hey listen, ARR talks about rate of return. Sorry, continue with our discussion last 1 minute back. Tell me, always company take up a project, whether it results in profit or loss, leave it. But projects are done for making profits or making losses. Now, second question. Profits in a project are taken by debenture holders or equity holders? Debenture holders will not take anything. They will take only one thing. What is it? That's it. We don't give 1 rupee profit to them. Profits are always taken by equity only. So tell me, equity shareholders require what profit? EBT profit, EBIT profit, sales, contribution, EAT. Equity shareholders will take dividend. Dividend is taken from sales. From sales directly they will take dividend. From contribution, from EBIT, from EBT, from EAT. Answer. EAT. Preference shareholders are not there. Let us assume. Can EAT be taken by the shareholders or not? Therefore, return here should be written as EAT or PAT, anything, profit after tax or earnings after tax. Divided by what? Investment. Divided by everyone, divided by here investment la problem ki. Investment can be taken in 2 ways. Number 1, original investment. Number 2, average investment. Repeat everyone. Second question for all of you. In a capital, hey please, important chapter here. Listen. Please, open the notes. Listen to the concept. Shall I? See this. See here. EAT divided by investment. So, investment can be taken in 2 ways. Number 1, original investment. Number 2, average investment. First thing. So, there are 2 types of investment in the denominator. You can take either original or you can either take average. Listen, numerator must be average. You should not take EAT, you should take average EAT or average profit after tax. Reason I will tell you. See, capital budgeting project, first day of our starting of capital budgeting chapter, I told you, what are the features of capital budgeting project? Read the notes and tell me. Very good. What is the first feature of a capital budgeting project? That's first thing. Decision in capital budgeting is a short term within 1 year, more than 1 year. Lovely. Means if I purchase a laptop, I will use for 6 months or 8 months or more than a year. A mobile phone we will use for, whether you will use or not is separate. Meant to use for 1 year, more than 1 year. Laptop. Loudly. A rice bag. A small rice bag. A 10 kg rice bag. These are all current assets character. Are you understanding that? At home, listen please. At home we are having a mixer grinder. At home we are having pulses. Pulses is a current asset which will be consumed in 1-2 months. But mixer grinder is a fixed asset. We will use for 4-5 years. Do you understand the point now? Here you should not see the cost. Mixer grinder is this much, pulses are this much. Therefore, which is more costly is capital. Capital expenditure, there is a nature. Benefit of the asset should extend within 1 year, more than a year. Answer. Salary. And once in 5 years, if I pay, person will work throughout the 5 years. Cut up a batch. No. If I pay salary, that month only he will work. Next month, if I don't pay the salary, he will leave. These are all expenses, not expenditures. Expenditure is always a capital nature. Capital expenditure always provides us a benefit for 1 year, more than 1 year. Loudly? The first point that we have to understand. Okay, let us continue now. Please see the screen. See here. I purchased a fixed asset. Inflow or outflow? Purchase of an asset is inflow or outflow? Cash inflow, cash outflow. Now answer. Once I purchase an asset, benefit from that asset will come for 1 year, more than 1 year. Then I will take like this. 0 means what? You know the meaning. 1, 2, 3, 4 and 5. So tell me, what is the life of this asset? Answer. So it will give me inflow for 1 year, 5 years. So first year profit, second year profit, third year profit, fourth year profit, fifth year also I will get a profit. Yes or no, everyone? So tell me, I will get profit for 1 year, 5 years. Question to you. Denominator is what? Forget about average. Denominator is what? Loudly. Investment, when you will put all the 5 years, 0 year. Loudly. But profit will come all the years, 0 year. Then profit for the first year 1 lakh, second year 1.5 lakh, third year 0.8 lakh, fourth year 1.2 lakh, fifth year 1 lakh. Let us say, which profit you will take here? No, don't take average, I told you. Normally, which profit you will take? Higher you will take, lower you will take, what you will take? Therefore, because this problem is coming, project investment was made only once, but project profits are coming over 5 years. You should not take any one among the 5, you should take an average. This is the point clear, yeah? So tell me, in the numerator, you should take profit, average profit. So all these 5 when added and divided by 5, you will get one answer or not? That should fall in numerator. Up to here, understood everyone? Next, second, investment. How much is an investment? Let us say 3,50,000 is the investment. How much? Now tell me, what is the numerator value? Please use calculator and tell. 1 plus 1.5, 2.5, 2.5 plus 0.8, 3.3, 3.3 plus 1.2, 4.5, 5.5. Divided by 5. How much is the answer here? 1.1. Okay. 1.1 lakh. It should come in numerator or denominator? 1.1. Loudly. Denominator, how much should come? 1.1 divided by 3.5 into 100. And how much? 31.43. Okay. 31.43% per annum. 31.43%. Now, see here. Please see there. 31.43% per annum is our annual rate of return. That's why per annum we have written. What rate of return? Per annum, okay. What rate of return? Annual. Annual means 1 year, 2 years, or 5 years, or 1 year. 1 year we call it as what? Annual. So, now answer my question. Please listen. This is one way of understanding. This is right only. But there is another formula which is much better than this. That is average investment formula. Logic also I told you in one of the last classes. Okay. I will repeat one more time if you forget. But please listen carefully. Tell me, ARR, what is the formula? ARR, what is the formula? Average profit after tax divided by average investment. Average investment is important. See, I am putting investment for 1 year. I am putting investment for all the 5 years. I am putting, listen to the question. I am putting the investment one time, all the 5 years. But benefit will come. That's why this is which expenditure? That's why it is which expenditure? That's why we are doing a chapter called as what? Capital budgeting, not revenue budgets. What we are doing? Capital budgeting. So all cases of life will be more than 1 year in this chapter. It will not be less than. Because we are not doing revenue project analysis. We are doing what project? Capital project analysis. Revenue project analysis when we will see, sir. Next chapter after that we are going to start with working capital management. Which chapter here? There we will see the current assets analysis. Which analysis, sir? Current assets analysis. There we will see working capital, creditors, debtors, all things we are going to see in that particular chapter. Up to here, all you are comfortable? Understood? See the screen once. ARR, average profit divided by average investment. I will ask one-on-one basis the question, answer. Do you know the meaning of average PAT? What is average PAT meaning? Add all the profits divided by number of years. Divided by, then you will get, that is okay. What is average PAT means? PAT per annum. PAT per annum. Accurate, average. Average. In reality, we got 1.1 lakh in the previous question. First year, how much is the profit? It is not 1.1, but we got 1.1. Okay, next year, we got 1.1. Next year, then also we got 1.1. 1.1 is not accurate. 1.1 is what? Average. It is average profit only we have taken. Next, average profit divided by average investment. Average? Doubt will come. Sir, profit at least we are getting for 5 years. Therefore, average means we will divide it by 5, we will get average per annum. Investment is made only one time, sir. When investment is one time we make, how come averages are possible? It is possible. How it is possible, let us understand. I will ask a question, answer to this. How much is our investment? I want loudly the answer. Super. Now answer. Life is how many years? Very good. Life is 5 years. Now 3,50,000 divided by 5, every year 70,000 is the depreciation. Basic simple calculation here. SLM basis, you depreciate the asset. 3,50,000 divided by 5 means yearly how much? Loudly. Very good. Now listen carefully. See the screen. How much is our profit in the first year? Very good. What worth asset you used? What is the capital? What is the asset value? That 3,50,000 generated how much profit? Very good. Now my question. This 3,50,000 asset will be 3,50,000 after 1 year. Will become 3,50,000 minus 70,000. You understand? 1 year if you use the asset, value will appreciate or depreciate. Loudly. 3,50,000 will become 4,20,000. 3,50,000 will be lesser than 3,50,000. Loudly. And can I tell it is 2,80,000? 2,80,000. So tell me, 1 year how much depreciation happened? 70,000. It became how much? Next year it will become 70. Will you say? Other also you are breaking your head. Okay, now next. Now you are telling the answers. The 0. Okay, now tell me. See the screen and tell. Don't sleep. See the screen and tell. 0 to 1 year. I used what worth asset? 0 to 1 asset. I used what worth asset? 1 to 2 what worth asset? Super. 2 to 3 which asset? Very good. Next. 3 to 4. 4 to 5. 50 renting, what is the value? That's what he also wanted to tell. So, what is the point here? Don't tell that you used 3,50,000 asset for entire profit after tax over 5 years, because profit is coming for 1 year, all the 5 years. But machinery value will be same or depreciate. Therefore, you should not take direct investment. You should take which investment? Average investment. I will ask a question. Your work is to give a common sense linked answer. Don't just blabber some answer on my face. Think and answer. Tell me. I said a statement like this. I utilized 2,80,000 worth asset. You can see the screen. Where 2,80,000 is there? First your eye should go there. Okay. I said a statement like this. I utilized or I used a 2,80,000 worth asset to generate a profit of 1,10,000. Correct or wrong? Statement made. Again I am repeating. I used a 2,80,000 worth asset to generate a profit of 1,10,000. Statement made is right or wrong? Answer. This 1,10,000 is 1 year average. Average. Sorry, second question. So statement is wrong. Sorry, I will use another statement, tell the answer. What is the profit for third year? What is the profit for the third year? 0.8 lakh. And how many thousands? Yeah, thousands is the answer. Correct? That profit came at the end of which year? Answer. Second to third year. What is the asset value? How much worth asset I utilized? Now I will say a point like this. I have utilized a 2,10,000 worth asset. I have utilized a 2,10,000 worth asset to get a profit of 0.8 lakh. Statement made right or wrong? Again I am repeating for one last time. I have utilized a asset worth 2,10,000 to generate a profit of 0.8 lakhs. My statement is right or wrong? 100% right. Why? Reality also that only happened. No. But problem is, in this answer, you are showing as if 3,50,000 asset is used throughout the 5 years. But in reality, we did not use a 3,50,000 worth throughout the 5 years. Correct? 3,50,000 asset is when it is 3,50,000? 0 na 5 tell that. 0 5. Tell me 0 period ke what is the value? 50 year ke what is the value? Loudly. I said my asset value is 3,50,000 throughout the life. Correct or wrong? Answer. My asset value is 0 throughout the life. But 0 is there, 3,50,000 also there. But all the time 0 is not there. All the time 3,50,000 also not there. Correct? Therefore, what they started doing, they have started taking average. It's not completely 350, it's not completely 0. Take average of both of them. Opening plus closing divided by 2. Okay, tell me. Average investment, what is the formula? Start. Don't see, with common sense you can tell now. Start. Opening investment plus divided by 2. But there is a small problem here. See, normally closing value of an asset is always a 0 value. Normally closing asset value will be always a 0. But sometimes we get a salvage value. Answer. Question. Average what? Average. What average? Average what? Investment is a outflow na inflow na? Very good. Is a outflow number. Correct? Opening investment is a outflow. Closing investment is also a. Salvage is not an outflow. Salvage is a inflow. So tell me, minus salvage divided by 2. So therefore, closing value is always how much? 0. 0 has no significance. Therefore, what they will write? Opening investment minus salvage value divided by 2. This is what I discussed even in the last class. You all remember the concept clearly? Yeah. Tell me, what is the formula for average investment? Start. Opening investment minus salvage value divided by 2. Divided by 2. My small portion now. In our example, you tell, what is our opening investment? Loudly? Okay. Let us assume that 50,000 is the salvage. How much is the salvage? How much? Bad response. 3,50,000 minus 50 means how much? 3 lakh. 3 lakh divided by 2 means what? Loudly? I have one small question now. Tell me. What is my opening investment? Loudly? But numerator, if you see, my net investment is only 3 lakh. Really, I spent that extra 50,000 also or not? Start again. Today, at what price I purchased the asset? Now start. From my pocket, how much went out? Loudly, loudly, loudly. But in the numerator, we are showing as if we spent only how much? And the extra 50,000 also I spent or not. So therefore, what they will do? Plus salvage value. Plus what value? Salvage value. At least up to here, you need to remember the formula. Okay. So now tell me, what is the formula for ARR? Both the models. Start. Original investment model, average investment model. So start. First original investment ki model ki you tell the answer. Average profit after tax by original investment into 100. Start. Second one. Average profit after tax by average investment into, what is average investment? Opening investment minus salvage value divided by 2. This is average investment. But in this, what is missing? Salvage. You can change working capital also, you can add, but not that much required. Up to here formula, everyone understood. With this, we completed our first concept called as ARR. We already completed this in the last class. I just wanted to revise once before we move on to doing the problems. If you are okay up to here, we'll go into the second concept. Understood up to here? Please, no noise. Listen. ARR question, ARR questions are rarely tested in exam, but if it is there, we will do when we come into that particular concept. If the question is there, we will do, or else in the sequence of solving the question, if ARR comes, we will do that question and we will complete. Okay. Separate ARR questions won't come. Hey, if you remember also in the last class, I told you, most worst method in capital budgeting is what? ARR. Because it do not consider discounting. And moreover, it don't consider cash flows, it consider profits. I told you in the last class, I mean, the first class in capital budgeting, I told you that logic to you, if you remember by any chance. Let us start. Second, what is the second concept we have to discuss here? Please see there and tell. Listen, agenda for the today's class, I will tell you clearly. Listen first. What we completed first model? Yeah. Super. Second one we are going to start is payback period. What is the concept? Continuing concept is called as what? Discounted payback. Discounted? Finally, we will go into the concept called as NPV. Concept of? Once these 4 are completed, then we will start doing around 15 questions, because all 8 marks questions in exam are coming on combination. Means they will ask you to calculate payback, NPV, discounted payback, IRR. Listening? They give all the 4 models. Sorry, if you don't believe me, you can check this question. See, calculate NPV, calculate IRR. Okay, next again calculate its IRR. Next, project's payback period. Now tell me, one question they have asked all the 3 to 4 models or not. You can see another question of the similar kind. See there, what they are asking? Read. Not just payback, NPV, IRR. 10 marks question came. Like that they will test you in exam. Are you all with me? Understanding? Sir, test another question now. See there. What are the questions they are asking? Profitability index, NPV. Again 10 marks question. RTP question also. Next, question number 5. Payback, NPV, profitability index, IRR. Question gave for 10 marks. All 10 marks questions that comes in exam will contain one technique or multiple techniques. Loudly. They will ask you payback or discounted payback. Any one will be tested in exam. Again, profitability index, NPV, IRR. And what is the institute's intention? I should not ask 4 or 5 questions in capital budgeting. I should ask only one question, but I should test his complete knowledge on the chapter. Clear? So, whatever question like he will ask all the concepts in capital budgeting. That's it. If you prepare, 10 on 10. If you don't prepare, utter flump, etc. Understood the point? Listen to the class properly. You will solve every question came in exam for 10 marks. Today only, in the class only. Clear? So now I am moving into the second model called as payback period concept. What is the concept here? Like PAR. Listen first. I will give time to write the basic notes on PVP, and then we will go into the problems before completion of that. NPV also I will complete. Then we will go into payback. See the screen once. Listen. Payback period. What does it mean? See. Listen. Whenever management put money in the project, they wanted to know read properly and loudly. Means what? Whenever I am putting money in a project, first question management will ask the chartered accountant or cost accountant who is analyzing the project is, sir, I will put money in the project. How many years it will take for getting my investment back? How many years it will take for getting my investment back? And how many years it will take? Sir, I will put 10 lakhs in the project. It will start giving me returns. Sir, our returns all total should at least give back my investment or not? How many years it will take? That computation will be done using payback. That's why every exam question of PVP will be tested, because every decision in real MNCs and other companies, whenever they take a project, first decision will be taken on the basis of payback period. If payback period is higher, better the project, lower is better the project. Common sense you use, and lower payback is best project, higher payback is best project. Loudly? Obviously lower. See, two projects are 5-year projects are there. One project payback period is 2.3 years. Another payback period is 4.1 years. What is the difference between both of them? Don't tell 4.1 minus 2.3. I'm not asking that difference. And see, two projects are there. 5-year project. Project A payback period is 2.3 years. Project B payback period is 4.1 years. Which is the best project? On the basis of payback period. Answer. What do you mean by A is better? What do you mean? A is better, okay. What do you mean by that? 5 lakh rupee invested, everyone. That investment will come back to me within how many years, sir? 2.3 years. But second project will give me back that 5 lakh when? Loudly. 4.1 year. Which is good project? Which is good project? Now I will ask a question. There are two projects. If you don't listen, gone. I'm telling very seriously, please listen. Project A, Project B. Project A, investment 10 lakh. Project B, investment 10 lakh. Project A, payback period 4.7 years. Project B, payback period 6.3 years. 3 years. Rank on the basis of payback. Tell me, which project is better? A or B? Rank them. Rank them. What rank I should give for A? What rank I should give for B? Up to here, everyone understood clearly? Yeah? Loudly, loudly, loudly. Okay. Now the question. 4.7 is 6.3 came. If you are in the CFO position, chartered accountant or a cost accountant, selecting the project, what will you suggest the management? Obviously, project A or project B. Answer. You might be wrong, maybe many times out of every 10 times you select like that. The reason is payback period is good only. It will give a good opinion about the project and how much speed of recovery is there you will see. But you will not have projects giving bigger cash flows after payback. Projects giving bigger. Bad. Projects giving. I will give a super duper example in life you will never forget. Lower payback period projects are like T20. Higher payback period projects are like 1 days and test matches. Consistency and bigger runs will come. Speed will be low. You understand? T20 la 150 runs you will get just in 13-14 hours itself. Correct? 1 day international same 150 will take 30 hours. But runs if you see on an overall basis, they will score 350, 400, 420 also sometimes. Correct? But here maximum run rate will be generally average run rate here in normal matches will stop at somewhere around 170 to 180. Average will stop. Their bare minimum will be 170. Are you understanding? So payback period, the problem is you will select a project on the base of payback, but at the same time you are losing something good. See the screen. Project A gave cash flows like this. I want you to see the screen. Both are 8 years both are 10 years projects. Both are cash flows 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. First year 1 lakh, here 20,000. Second year 1.5 lakh, here say example 1 lakh. Here 5 lakh, third year. Here 3 lakh. Fourth year it has given 4.2 lakhs. I have given 1,50,000. Fifth year or 3.2 lakhs, 1,50,000. Fifth year 3.1 lakhs. I have given, this has given 3 lakh. Sixth year 1.1 lakh, here 4 lakh. Or you are listen or say example 6 years I have done 50,000. Here 2 lakh I will write 50,000. Seventh year 0.8 lakh, 2,50,000. Eighth year 0.6 lakhs, here 3 lakh rupees. Ninth year here it has given 0.2 lakhs, here it has given 5 lakh. 10th year it has given 0.1 lakh, here it has given 6 lakh. Now you tell me, payback period point of view, if you see 1, 1.5, 2.5, 2.5, 7.5, 7.5, 3.2, almost take this example on a lighter note, I just randomly written. So around 3.5, 4 years, this project has recovered the principal back, correct everyone? But this project has taken almost around 6 years plus to get back our investment, yes or no? But you total the cash flows, which project has given a better cash flow? Project A or project B? Loudly. Therefore, you should not always go only by payback, you should go by other techniques also. Ranking, how it will be done? First payback, next NPV, next IRR, next profitability. Which project is ranked majority by all the 4 techniques, that will be selected. That's why in exam all the 4 they will ask you. Do you understand my point? Example. NPV, project B is better. Payback, project A is better. Payback, bad response gather. Payback, NPV, IRR, project A is better again. IRR, project A is better. PI, project B is better. PI, project B is better. Okay, like that another 4th technique we will take. ARR, project B is better, project A is lesser beneficial than project B. Now 3 techniques have favored project B, 2 techniques only favored project A. In this case, select project B. Like that they will ask questions in exam. Do you understand what I said? They will not give question in such a way, 2 models favored one project, another 2 models favored another, like the tie-up projects they don't give in exams. Definitely one project majority will be there. Should the point clearly? First of all, tell me what is the payback period. In a simple language, you tell what is payback. Payback period is the time taken for recovery of dash investment, also called as a principal account. So how much time it will take for recovery of that investment? We call it as payback period. Keep the heading payback period. Payback period. So all the live students also please answer. Are you all clear up to here? Sir, you all people are also clear to the concept up to here? Right on. Payback period. Point number 1. It is the time taken for recovery of principal or investment. It is the time taken for recovery of principal or investment. It is the time taken for recovery of principal or investment. Point number 2. Point number 2. Point number 2. There are two types of payback period concepts. There are two types of payback period concepts. A. Non-discounted payback period. Non-discounted payback period. Non-discounted payback period. B. Discounted payback period. Discounted payback period. Non-discounted payback period. Discounted payback period. You know how to discount our future cash flows? Calculator, you can't calculate. 3ST present value will press is equal to, and we can use is equal to an M plus. You remember at least how to use the calculator worker. Already we have done so many chapters on that. Sorry. Payback period are two types. Payback general, non-discounted payback. Second one is discounted. Example, what I have shown you is a non-discounted because we did not use any PV factor here. Raw cash flows we have taken and we computed. So, after what you have written, there are two types. One is non-discounted payback. Second one is discounted payback. Next, point number 3. Point number 3. Point number 3. There are two types of projects that can be analyzed using PBP. There are two types of projects that can be analyzed using PBP. There are two types of projects that can be analyzed PVP. In that, A, projects with annuity cash flows. 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 Okay, wow. Projects with annuity cash flow. Second, B. A is project with annuity cash flow. B. Projects with multiple uneven cash flows. Do you know the meaning of both the types of cash flows? First point, we are not fools to spend 10, 12 hours in time value of money. If you remember, I said that day, capital budgeting, I won't repeat again. Did I tell you or not? Not one time, around 30, 40 times I told that day. I won't repeat again in capital budgeting. With an opinion that you already completed in TVM, I am continuing now. Shall I? What you have written? Projects with multiple uneven cash flows. Answer it. Hey, everyone answer. What do you mean by annuity cash flow? Can you please explain me the meaning? What is annuity cash flow? That is, one second. Multiple years ki same cash flow na? Multiple years ki random cash flow sa? Multiple years same cash flow. That is called as what? Annuity. Multiple years are there. 1 year, 1 lakh, 1 year, 2.5, 1 year, 50,000, like that it is coming. We call it as annuity of multiple uneven. Loudly. So now listen carefully to my discussion. What you have written? Projects. No, project line you read, main line. PVP are of two types. A, projects with annuity cash flow. B is projects with multiple. Listen now. See the screen. This you have to understand. If you understand this, problems we can start solving. See, projects with annuity cash flow. Projects with multiple uneven cash flow. Again, we will divide it into two types. PVP, discounted PVP. PVP, discounted PVP. Don't write, I will give time. Exam like question can be of any of these four types. I can't predict also what will come in next exam, but 100% I can give guarantee beyond what we discussed in the class today, questions won't come in exam. Again, I am telling you, beyond what we are going to discuss in the class, questions won't come in exam. What we discuss only will come. But within this what will come, no one can know. There are four types. Projects with annuity cash flow, projects with multiple uneven cash flow. Projects with multiple uneven cash flow. Annuity, multiple uneven. If it is non-discounted PVP, if it is non-discounted PVP, simple question. Payback period will give result in rupees, percentage, years. Question is very simple. Use basic common sense God has given you. Again, ARR gives the answer in rupees, percentage, years. Annual rate of return or accounting rate of return will give us answer in rupees, percentage, years. Loudly. Super. Second question. Payback period will give you answer in rupees, percentage, years. Everyone. If you want a percentage, you will do return on investment formula. If you want, which formula you will use? What is the formula for return on investment? Return divided by investment. That can be average return or that can be average investment or original investment. Already we have seen or not. If you want live, reverse the formula. That's why exam like they ask you a question, calculate reverse ARR. It means they are asking PVP to you. No question. What is the ARR formula? Give normal formula. Average profit after tax by general formula you give average normal investment. Answer. Forget about average also. Tell me profit divided by what? Investment. This is return on investment formula as a percentage. Correct? I will reverse this. Investment divided by PAT. Investment divided by loudly. Investment divided by PAT. If I do like this, I will get number of years PAT should be there to recover this investment. And in a simple language, investment is 3 lakh. PAT is 1 lakh. How much it is? 3. It takes 3 years to recover my investment through my profits. That's the meaning. Do you understand? It takes how many years, sir? 3. Profit after tax denominator of 1 lakh is there. That 1 lakh is for how many years? 1 year. Investment is how much? 3 lakh. And how many years I should generate profit to recover the 3 lakh? Therefore, payback period is nothing but reverse to the concept of ARR. Reverse to the concept of, but there is a small change. ARR consider profits, payback period consider cash flows. Payback period considers loudly. Payback period considers. So now you will tell, I will listen. Start. What is answer for annuity cash flows, project cash flows, annuity cash flows? How to do this? Discounted payback. No? Tell me, what is it? Divided by cash flow per. Don't take profit. Payback period consider profits are cash flows are. Example, I told you that. In that example, I also said instead of profit, you should take cash flows. Don't do mistakes in exam. Start. What is the formula for payback period non-discounted? Use your common sense given by God and answer this. Investment 5 lakh. Investment. Loudly. Investment. Every year I will get 2 lakh. Every year I will get. Tell me the answer. How many years it will take to recover my 5 lakh? 5 lakh divided by 5 lakh divided by how much is answer? What do you mean by 2.5? 2.5 is what percent? Yes. And now how to understand? How to understand? It takes 2.5 years to recover back the principal, to recover back the or to recover back the investment. How many years it will take? Now everyone understood the meaning. Next, discounted payback na simple logic ya, romba simple concept. PVCF you take or technically annuity na PVAF. I will ask a question, tell me. I will get 1 lakh per annum, I say. How much? I will get 1 lakh per annum. How many years I will get? 5 years. See, year 1 to 5, cash flow 1 lakh, PV at the rate of 10%, PVCF, please tell this value and use calculator. 10% give 5 years annuity value. You remember how to do annuity? 1 by 1.1 equal to M plus 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 MRC. Some people forgot basic calculations also. Tell that answer. 3.791. 3.791 into 1 lakh is how much? 3 lakh. 3 lakh. 100. So 3,79,100. Up to here, everyone understood? Loudly. Listen. Listen. Shall we continue? Yes. So, instead of taking the cash flow per annum, we will be taking present value of annuity cash flows per annum. Present value of annuity cash flows per annum. This when you divide it by 3, you will get one value. With that, when you calculate, we call it as what payback? Discounted payback. Next, projects with multiple uneven cash flow. Everyone repeat. Projects with for this, no formula is there. Direct attack, very easy. Listen carefully. Whenever multiple uneven cash flows are there, you will use cumulative cash flow model. Which concept here? Cumulative cash flow model. What is this cumulative cash flow model? We will do through the question directly. Before that, just see the notes once. See here. No noise, please. Yeah, payback period. 2 types. What are the 2 types? General and discounted. General is also called as a non-discounted. Hey, have you already written this or not? Initial investment divided by annual cash flow. Answer, sir, everyone. Have you done a concept discussion? Yeah. Writing, I am not talking. Concept, had we already discussed that or not? Writing, I did not give time now. I will give time. At least see this. Had we completed? If it is a discounted, we will use instead of cash flow. What cash flow we will use? Annuity cash flow we will use. What cash flow? Annuity cash flow. So this is how we will be doing it. Okay. So do one thing. Copy down this. I have written roughly. You written in a normal sense. Payback period divided into two parts. Payback with annuity cash flows. Payback with multiple uneven cash flows. I mean project with annuity cash flows. Second one, project with multiple uneven cash flow. Wait a minute, I'll make it screen. Right. Project with annuity cash flows. If you complete writing, we'll start doing the 8 marks questions given in exam. Projects with annuity cash flow, projects with multiple uneven cash flow. Projects with annuity cash flows are of two types, non-discounted and discounted. Projects with multiple uneven are also divided into two parts, non-discounted and discounted. Projects with multiple uneven cash flows, there is no formula. Direct attack, that's called as a cumulative cash flow model. Very, very easy. Zero year, I made an outflow of how many lakhs? 10 lakhs. Now is the audio clear, live students? Okay, let's continue. Please listen. 0 year, our outflow is 10 lakh. Year 1, we are getting 2 lakh. Year 2, we are getting 3.1 lakh. Year 3, we are getting, say for example, 4 lakh. Year 4, we are getting 2.9 lakh. Year 5, we will be getting 2 lakh, let us say. Or I will write this way. Okay. First of all, see and tell. I want please 100% attention on the concept. Please see there. I said I won't repeat again. We'll start doing the problems. Around 10 problems we are going to solve. Lot of confidence is required, concentration is required because problems are 10 marks questions that came in exam. Please see the screen. See the question first. Okay. How much is our investment here? 10 lakh. They say these are all the cash flows. Calculate cumulative cash flow. Calculated? Simple. Don't take the outflow. We are taking inflows. We are comparing it with outflow. See the screen. First year, how much I got? I recovered my 10 lakhs principal or not yet recovered. Still 8 lakhs is there. Correct? Second year, how much I recovered? Wrong. 5.1. Already first year I recovered 2. Next year I recovered extra 3.1. Totally I recovered how much? That's called as cumulative cash flow. Tell me. Third year time I recovered. Third year I recovered 2.1. But by the third year ending, I recovered 5.1 plus 2.9. How much? 8 lakhs I recovered. Still 10 lakhs. How many lakhs is still there? Loudly. Very good. Fourth year, how much I recovered? Fourth year. Listen to the English language. Fourth year. 4 lakh. By the end of fourth year, how much is recovered? Loudly. I wanted to recover 10 lakhs or 12 lakhs. This is not at all required. Okay, because we reached our payback. Now you please answer to the question. Tell me. Fully how many years it has taken? Wrong. Fully how many years it has taken? 3 full years it has taken. See, by the end of third year, how much principal is recovered? How much we invested? First year, how much recovered? 2 years ki how much is recovered? 3 years ki how much is recovered? Last fourth year, how much we recovered? By the end of fourth year, how much we recovered? 12. But we wanted to recover 12 or 10. Therefore, recovery happened between third and fourth year. Between third after, fourth before. Third after, fourth before. Or in a simple language, it started somewhere between these 2 dates. Yes or no, everyone? I will write a red line here. See. Between these 2 time periods, my principal is recovered. Correct? Use your common sense and tell. How many years it is taking to recover 4 lakh? Start. One second. Third year time, how much principal is recovered? That. Fourth year ending, how much principal is recovered? Loudly. Means between third year and fourth year. Between third year and fourth year. And fourth beginning to fourth ending. That 1 year recovered how much principal? See there and tell ya 4 lakh. I want 4 lakh recovery to reach 10 lakh. I want only 2 lakh. So 4 lakhs has taken 12 months. 2 lakhs might have taken how many months? Therefore, my payback period is 3 years and 6 months. This is how cumulative models will work. Do you understand my point clearly? Understood or not? I will give one normal, general, whatever come in my mind, one illustration. Will you do fastly? Don't write. Do on calculator and tell me. Okay. I want payback period for an investment of for an investment of 11.2 lakhs. Randomly, some number came in my mind, I have given. But answers are there for this. You can see. Live students have already given the answer. I'm waiting for you people. Everyone give the answer. Yeah, why you are delaying? Simple question, 1 minute. Hey, this question will come as MCQ for 1 mark. You should spend maximum 1 to 2 minutes. First, what we have to calculate? Cumulative. Tell me, cumulative answers you tell. 1.5, 3.5, 6.7. Sorry, tell 10.7, 12.8. One thing is clear. Remaining is not required for us. Because we reached our 11.2 lakh by the end of 5th year. Now question. Exam, mind should work properly. How many full years it has taken? 4 years of full years it has taken. That answer is, everyone have got that answer. Balance के some mind is to be occupied. Tell me, 4 to 5 years, and in this 1 year gap and a 12 months gap, how much is recovered? 2 point, loudly, 2.1. But we require 2.1. We require difference of 10.7 minus 11.2. 10.7 minus 11.2. Point will take how many of the years? 0.5 divided by 2.1. That also you have it. 1 second answer. Fourth to 5th year, how many years? 1 year. If 1 year, how much is recovered? 2.1 is recovered. 1 year recovered 2.1 lakhs means we want recovery not from 10.7 to 12.8. We want only from 10.7 to 11.2. Difference 0.5. If it takes 1 year to recover 2.1 lakhs, how much time it will take to recover that 0.5 lakhs? 0.5 divided by 2.1. Years format we do. 0.5 divided by 2.1. Correct. Tell me. 0.238. So 0.24 year. Correct. 0.24 of a year. Listen. In 1 year, how many months are there? Loudly. 12 months will make 1 year. Correct. We got answer as 0.24 of a year. 1 year is required to recover 2.1 means 0.24 of a year is required to recover that 0.5. Correct? 0.24 into 12. 2.9. 2. It has taken 4 years and 2.8 months to recover. Easy sense if you want to write an exam. 4.24 years it has taken to recover our principal back. Complete 4 years it has taken. Additionally, another 2.4 of an year has taken to recover back our principal of 11.2 lakhs. Everyone understood the point clearly? Yeah? Since I got only 50% of the response from the class, I will give another question. Investment is 16.8 lakh. Okay, 1 minute. 18.8. 18.8 lakhs is our investment. Do it on calculator and tell. Some are saying 6, some are saying 7. 7.42. I don't know. Some random numbers are written. Let us do. Correct. Now, then live students, offline students have given fastest answer. But before that, to see the screen, tell me the cumulative cash flows one by one. 1.2. Right, 1% tell the answer here. Cumulative 1.2, 3.3, 6.4, 9.2, 11.5, 12.9, 17.17. Okay, 17.3. Remaining not required because we reached our target. Now everyone answer. A. Answer this. First of all, tell me, how many full years it has taken? 7 full years it has taken. Up to here, everyone convinced? So, how many years it has taken fully? Plus some number of years has taken partially. So, that all becomes our payback. Correct? Use your common sense and tell. Hey, listen. Not yet completed. Tell. 7th year, it is how much? 70. By 7th year. By 8th year, it became how much? For 1 year, how much difference we got? Loudly, 4.3 we got. Correct? But our target amount is 21.3. 70. Our target is 18.8. Loudly? What is the difference? 1 point? If 1 year has taken to recover 4.3 lakhs, 1.8 lakhs will be recovered in how much part of a year? 1.8 divided by 4.3. How much? 0.42 years. So therefore 7 plus 0.42 years. Answer is 7.42 years. What they said is the right answer. Everyone understood the point clearly? Yeah? First of all, everyone confirm payback period full pakkana everyone. Now question. We have done this using cash flow or discounted cash flow. This working is done using cash flow and discounted cash flow. Because we did not take any PV factor. Correct? If I take PV factor, then I will get a discounted cash flow, correct? For that, if you take cumulative and do the same, that's called as a discounted payback period. New concept, existing concept. Existing, you have done discounted cash flows now so many times. So that we will directly do in the exam questions directly. Up to here, payback period concept. Everyone understood the concept clearly? Yeah. Tell me, what is payback period? Time taken for recovery of principal. Also called as what? Principal is also called as what? Investment. So time taken for recovery of investment. We call it as what? Payback period. We call it as what? Period. That's it. With this, we have completed two important models. Number one, ARR. Number two, payback period. Okay. So once these two are completed, next concept we are going to start is NPV. Like this, first what I will do now, post the break, I will first give introduction to NPV concept. What is NPV? How the working has to be done. Without explaining any logic. First, let us start understanding the basics of NPV. Start doing the questions given in exam. Listening, huh? At the end of NPV, after doing problems on NPV, IRR, everything, I will explain you the real meaning behind the NPV, and then we will close the class for today. So by then we will be completing ARR, payback, discounted payback, NPV, IRR, PI. Listening, huh? Tomorrow's session, the balance part we will do, and we will close up the capital budgeting discussion. Clear, everyone? Sorry, first of all, tell me, up to here, ARR, payback, discounted payback, cumulative cash flow discussion, everyone had a full clarity, yeah? Okay, so take a break and come. We'll continue with the remaining parts. Please everyone. Already it's late for me. Please, let's continue. Keep the heading NPV. Shall we continue? Keep the heading NPV. Keep the heading NPV. Okay. See here. ARR completed. Payback period. They listen. Discounted payback completed. Now we are going to complete another three things: NPV, IRR, PI. Once we complete understanding these three, then immediately we will be going into start solving the questions. Very big questions are there, 10 marks questions. Capital budgeting question generally comes in exam for 10 marks. So therefore the 10 marks type of questions, how they are coming in exam, I will show you and we will start solving those questions. Please concentrate properly. Income tax started up for you. Started up. Once it start, PGBP one chapter will be there. Which chapter? Profits and gains from business or profession. In that, there is a unique method of depreciation. Normally, what is depreciation means what we will tell? We will take the asset value, SLM divided by life, WDV multiplied by a percentage. The basics of depreciation. But income tax law, we don't do that way. Income tax law, SLM we don't use. Unless and until it's a power generating unit, we don't use SLM. WDVA income tax will use. And moreover, under Income Tax Act, listening everyone? Moreover, under Income Tax Act, we won't calculate depreciation on the basis of asset. We will calculate depreciation on the basis of the block of asset. What I said? It's a unique concept. On that we have to discuss today. Because exams, FM exam, they are asking questions on block depreciation as an adjustment. What adjustment? Block depreciation, not asset depreciation. Block depreciation as an adjustment. So students should know first what is a block of asset. Are you listening? So I have to explain that because last attempt before attempt like FM, CA inter FM, they asked a question on block of assets adjustment in CA inter FM. So be careful, listen carefully. So see the screen. We are now going to do NPV, IRR, PI. ரொம்ப simple concept here. Logic behind NPV, logic behind IRR, these all I will discuss at the end after doing the problems. First target number one is we have to solve the question answers given in exam. Clear? With a decent amount of understanding. Once everything is completed, we will understand clearly as what is this NPV, how the numbers are coming, all those things we will discuss at the end. Shall we begin? Listen, concentrate on what you are seeing here. NPV, net present value. What net present value says? Net present value, wording itself is very clear. What is it? Present value. So future amounts they will give, we will discount it and calculate what value? Present value. Concentrate, I said. Important. Again. NPV. N you leave. PV you take. What is PV? How to calculate present value? Using discounting or compounding? Loudly. Discounting. And what cash flows will be given? Future will be given. Use the discount rate. Bring it to present. We call it as what value? Present value. We call it as what value? Very good. Present value of inflows will come. From that present value of outflow you remove, it becomes net. That's why what is the name of the concept? Net present value. Repeat again. Net present value. In simple language, NPV is called as cost benefit analysis. What analysis? Cost benefit. I wanted to buy an asset. What is the cost? What benefit I will get out of it? Listening? When I say benefit, what benefit? Monetary benefit I am getting out of it. What benefit? Monetary benefit. So take the monetary benefit that is coming out of an asset in future. Discount them. We will get present value of future cash flow. Present value of and reduce the cost of this asset. If it is positive, accept the project. Negative, reject the project. You can understand 20-25% of what I said. Correct? Now balance 70% through numbers I will explain. See the screen. See. There is an asset. That asset cost 1 lakh. That asset cost 1 lakh. This asset is expected to give cash flows for next 3 years. First year it will give 40,000. Second year it will give 50,000. Third year it will give 60,000. Tell me, this asset will give how many cash flows? 3 cash flows. Please see the screen here. Please understand properly. Tell me, what is the cost of the asset? Loudly. I ask a question. You will get these cash flows and then you will buy the asset, or first you will buy the asset and then you will get the cash flow. What comes first? Asset will come first. Then asset will generate how many cash flows? 3. First year how much it will give? Second year? Third year? Very good. Now question. PV at the rate of something you have to write down. Very good. Tell me. 1 lakh rupees, using what we will purchase 1 lakh? You have to purchase asset. What is the cost of the asset? Who will give money to you? You will steal money or print notes. Someone has to give us money. If equity has given money, discount using KE. If debt has given that 1 lakh, discount using KD. Both has given half and half for some proportion. KO. You know this concept already because we have already completed which chapter? Subcapital. That's why that's a mother of entire FM. Clear? Did you understand what I said? PV at the rate of what we should write? PV at the rate of something you have to write. What you should write? It depends on what way you raise that 1 lakh. I raised that money 1 lakh using equity. What should I write? KE. Raised by debt. What should I write? Both are used. How to calculate? You know that. Remember the sources, amount, proportion, cost, weighted cost. So see, 1 lakh rupees. Let us say we raised money using 10%, 50% equity, 50% debt. Both are 10%, let us say. 5% plus 5% become 10% PV factor. Up to here, everyone understood? Next one, PV CF. Please see the table. Tell me what is the fourth column? Fourth column. PVCF. What do you mean PVCF? Present value of cash flows means which cash flow? Present cash flow, the future cash flow. For that what we will calculate? Present value. Okay. Tell me. 10% ki first year. 10% first year. 0.909. Next. Very good. Next, same type, multiply 40,000 into 0.909 and tell the present value. $36,360. Start. Tell me. 40. 300. Okay. Third one. 40. 60, correct this one? Now tell me, hey, see the screen? Tell me, now tell me, answer to the question now. Total of PVCF, total of PVCF came to how much? This we will call as DISCI, discounted cash inflow shortcut. Don't write an exam like this. Okay, discounted cash outflow na DISCO. DISCI minus DISCO. Okay, what is the DISCI total? What is the DISCO total? 1 lakh. Okay, sir, you did not discount the outflow, sir. Array, outflow is happening today only. For today, there is no discounting. Discounting will happen only when there is a future. This 1 lakh you are putting after 1 year, today what? Today what discounting will be there? Nothing will be there. Rupee received today, rupee received today. Which is more valuable means both are same. Please. See here now. Tell me. NPV, positive or negative one? Benefit is how much? Benefit, total benefit is how much? 120 to 720. What is the total cost? 1 lakh. What is the net benefit? These all are said in future value terms or present value terms. These all are said in future value terms or present value terms. So this is present value or future value or present. After deducting outflow, before deducting outflow, net of outflows. That's why what we will call it NPV. Full form. Net present value. This is net present value computation. Everyone understood the computation part. Logic, unimaginable logic is there behind this. Mind-blowing concept is there. But we will discuss all those at the end. First target number 1 is solving the problem. Question comes in exam is you should be in a position to solve it. Clear? Tell me, what are all the 4 columns in NPV computation? Start. Number 1. Here. Number 2. Number 3. Number 4 will be present value of future cash flows. Tell me. Outflow happened when? Already it is in what term? So you need not discount that. What are this? The 40,000, 50,000 and 60,000? They are in today terms of futuristic terms. Loudly. So what we have to do? Bring it to present value. This is how the answer will come. Everyone understood NPV computation clearly? Yeah? Everyone? Now listen carefully. Concept over. This concept. Exam lo what twist institutes will do. That's the next question. Sir, where difficulty will be? It is easier. Na? Then why sir everyone will tell NPV is difficult? NPV is difficult not because of NPV, because of the data. They don't give cash flows in the question. They give raw data. You should compute these cash flows. Their problem will come. Do you understand? And how they will give? I will tell you. They will give a lot of information. Company wanted to buy an asset. Asset is replacing an existing asset. This asset will generate a sale of 1 lakh units. Data number 1. Variable cost of 70 rupees per unit. Data number 2. You have to contribute. You have to calculate contribution. You have to calculate the fixed cost. You have to calculate the EBIT. You have to deduct the interest for raising that fund. You have to deduct the tax. You have to calculate EAT. You have to add back depreciation. You should calculate cash flow, and then you have to calculate NPV. Do you understand what I said now? And exam, 10 marks, why they will give? For this, 2 marks also wasted. Problem is not about this. Problem is about this. Cash flow they don't give. They will give raw data to you. You should calculate cash flow. The moment you calculate cash flow, this will be completed in 2 minutes. So on that only we are going to do a good number of questions and good quality questions in the class. First of all, everyone understood the idea behind NPV. Yeah? Tell me, what are the 4 columns in NPV computation? Life you should know first. Second, tell me what is a cash flow? Sales minus variable cost. Wait. In this variable cost, material, labor, overhead. In this overhead, again, factory overhead, depreciation will be there. Hey, I'm talking to you. Current bill, electricity bill, overhead, variable. Every month same electricity bill will not come now. Changes. Depending on the number of hours you work. More number of hours of working, more electricity bill. Less number of working hours, less electricity bill, as simple as that, correct? So sales minus variable cost. Variable cost again materials, labor, overhead. Overhead again not fixed overhead ಇದೆ factory. Factory overheads, depreciation. Factory overheads and depreciation. You have to deduct them. After deducting the factory overhead and the depreciation, you will be calculating what? Contribution. You know the remaining schedule. Start. Minus what cost? Fixed cost. Start. Minus next AT. But in this, depreciation is a cash or non-cash? Non-cash. We have to calculate what? Cash flow. What we have to do? Add back. Add back what? Depreciation. What you will get? Like this you should calculate for year 1, year 2, year 3. Those answers you should put here. Now do you understand what we are expected to do in exam? So exam they expect you to calculate NPV. They expect you to calculate cash flows and NPV. Cash flows and NPV you should be able to calculate. That only we are going to learn in the class. Clear everyone? That comes only out of practice. More number of questions. Okay. So let us begin. Before going into that, I will also explain what is IRR. I will also explain what is IRR. Even before that, I will first explain PI. PI, listen. See this table. I'll ask only one question. Tell as a formula. NPV equal to what as a formula? All the live students, are you all listening? You people answer. Tell NPV as a formula means what you will tell? Correct. Tell. Why you are thinking? Say answer is with you. Minus is called as what? Very good. If it is positive, accept. Negative, reject the project. Equal to na decision is yours. But generally, 0 also they don't accept. But positive na you accept the project. Understanding? Sorry. Negative, positive only you see. Okay. Positive means what you will do? Accept. Negative. Everyone. Positive. Negative. What do you mean by positive? What do you mean by negative? Bad response. You are not putting your mind. What do you mean by positive NPV? What do you mean by negative NPV? What do you mean by positive? What do you mean by negative? No. Give a good answer. What do you mean by positive NPV? What do you mean by negative NPV? Answer. Sorry, I will tell you anything above 0 is called as a positive. Anything below 0 is called as a negative. We need to know this is 0 now. 0 okay, we name as IRR. Do you understand the point clearly? What is positive? That response. What is positive? Anything above 0 is positive because 0 has no symbol. It is neither positive nor negative. 0 is very symbolless. Okay, rational numbers category look you can take. Sorry, now answer. Start. 0 above is called as what? 0 sub 0. I mean something below the 0 is called as what? Negative. And what you understand? Above 0 is positive. Below 0 is a negative. Above 0 accept. Below 0 not to accept. Okay, not to accept. First I should know when it will become 0. That concept is called as IRR. Fantastic concept, IRR concept. IRR concept we will calculate when NPV becomes 0. Repeat what I said. Tell everything what I said. IRR will be used to calculate when NPV will be 0 and not positive, not negative. I want 0 such that I will know when it will become positive, when it will become negative. Clear everyone? Now listen carefully. Not yet done yet. Big discussion. Listen. Now tell the formula one more time. NPV formula. Everyone answer means answer. Start. Risky minus. Okay. We'll give you what? Positive. Positive. Negative. What is positive? Anything above 0. What is negative? Anything below 0 is a negative. Anything above 0 will be positive. Anything below 0 will be negative. Up to here, clarity, yeah? PI means nothing but by disco. That's it. Another way of telling NPV. Another way of telling. Another way of telling. Okay. Now tell me, if a project gives positive NPV, PI will be more than 1. PI will be, repeat again what I said. Hey, you are saying all the last statements. I am telling full statement. What I said, if NPV is positive, PI will be more than 1. If NPV is negative, PI will be less than 1. If NPV is 0, PI will be exactly 0. PI also will be exactly 0. Or simply to tell, PI can also become exactly 1. Can also become 1. If nothing is given as an outflow, then it becomes 0. Hypothetical case, normally it will be exactly 1. Positive, anything more than 1 PI, accept. Anything less than 1 PI, exactly 1. Now what we will do, we will see when we come to IRR. Okay. So forget about other things. Tell me, what is the formula for PI? Risky minus disco. Repeat again. Risky minus disco is called as what? What is PI? What is PI? Risky divided by disco. Now the question will come, sir, already NPV we will decide whether to accept or not to accept because of positive negative. Anyway, if it is positive, PI will be more than 1. Anyway, if it is negative, PI will be less than 1. Why again we should do? Anyone? Apply this properly. See, I will tell you one thing. No one will teach me FM. I learned. Literally, I am telling you now. I learned on myself. Everything, whatever I teach in the class, except very few things. Remaining things, all we learned on own. If I can, why can't you? So very simple logic. Think and answer. That's all. Answer. NPV. Everyone reply. Already NPV positive you will accept. With the PI what you will do? Great. So I am asking the same. You will know how many times it is because okay. Positive you will anyway accept. Even more than 1 you will accept them. Positive means see. PI positive accept. Sorry. More than 1 accept. Less than 1 reject. When it will be more than 1 if NPV is positive. Perfect. That's the answer. See here. When NPV will be used, when PI will be used. Let me explain first. Correct. What he said is 100% right. See here. But one thing he did not tell, that I will first add and I will continue. Okay. First see the screen. There are 2 projects, A and B. You are listening? See here. NPV positive 50,000. Next one positive 60,000. Third one minus 20,000. 3 projects are there. Tell me which project you will take up. All are 3 projects NPV calculated. See there and tell what is the NPV of project A. Loudly. B. C. Which project will be outright rejected? Loudly. So we know that because of calculating NPV, we came to know that C is rejected completely. So out of focus. Over. Now what are all the two things we selected? Loudly. In this, which one is better question will come or not? Now tell me, whose NPV is higher? Whose NPV is lower? So which one will select? A or B? Loudly. Wrong answer. That's what I wanted to tell. For this NPV, my outflow is 40,000. For this NPV, my outflow is 40,000. For 40,000, it gave 50. For 40,000, this gave 60. It is better to take up project number B. Project number B. Or say for example, I change this way. Are you listening? For getting 50,000 NPV, I spend, say example 40. Clear? But to earn this 60, I spend 58,000. Now you will see NPVs and you will tell project number project number B is very good. Seeing only the NPV answer. Everyone. But technically speaking, how much I spent on that? 58,000 I spent. For that 58 it gave 60. But for 40 it gave 50. Now tell me which is better. Loudly. That's what I also wanted to tell you. Or for example, 1,40,000, 1,58,000. Tell me, 1,40,000 outflow when I put, NPV became 50,000. NPV became 50,000. Bad response. NPV became 50,000. And the discounted inflow is 1,90,000. What? 1,40,000 is the outflow. 50,000 NPV. NPV means a DISCI minus a DISCO is 50,000. And the DISCI is 1,40,000 plus 50,000. How much totally? 1,90,000. 1,90,000. Now you please tell me, with this knowledge, I am rewriting the example. Please tell. Listen. See here. What is the NPV of project A? 50,000. What is the NPV of project B? How much you spent for this particular project outflow? 1,40,000. Here how much you spend? Very good. Next, discounted inflow will be 1,90,000. This is 2,18,000. 2,18,000. Everyone please see the screen. Answer. Start. If you see NPV, both the projects are positive NPV and negative NPV. Now see there. If you see only NPV, they are giving positive NPV and negative NPV. And both are good projects only. But I wanted to select only one among them because I don't have money to take up both. I have money to take up only one. See the screen. So I have money to take up only one project. Which project? If you see only NPV, you will take up project B. But technically speaking, to get this 60,000 NPV, how much I spent as an outflow? 1,58,000. So calculate the PI now. PI means what? DISCI minus DISCO. So this divided by this. Calculate. 1,90,000 divided by 1,40,000. 1.36. Let us write 1.36 times. 1.36 times. 2,18,000 divided by 1,58,000. 1.38. Okay, see here. See here once. Please, everyone, listen. How much we got? 1.38. Not only in NPV, also in PI, which project is only selected? Normally on NPV basis, which project will be selected? B. Now also which project is selected? B. Now you can take up project number B. For example, it is not 1,58,000 outflow. It is 1,68,000 outflow. 1,68,000. Tell me what is the NPV then? Or what is the inflow then? 60,000 is the NPV. 1.32. 3. This one, discounted inflow. Discounted inflow 2,08,000. Outflow, how much I said here? 1 lakh. Tell me, Disky minus Disco will be called as what? NPV. I said discounted outflow is how much? 1,68,000. NPV 60,000. Tell this number. Hey, normal calculation you do and tell, yeah. 2,28,000 means what? NPV you calculated as how much? 60,000. So how much is your Disky? 2,20,000. So whenever two projects are there, I repeat again, project A, project B. Project A, you need to spend an outflow of 100. Project B, you need to spend an amount of 80. This will give you NPV, or technically speaking, this will give you discounted inflow 150. This will give you discounted inflow 150. Which one is better? Project A or project B, or which one is better? Why not project? Sorry, I will tell this way. Tell me. 145. Which is better? Now, normally, if you see 150 is greater than 145, we will select project number A. Yes or no, everyone? But please tell me, what is the NPV? 50 NPV? Answer, yeah. More project. Who is giving more NPV? Who is giving more NPV? B is giving more NPV. So, normally when you see the inflows, who is giving more inflow? A. So, we will think that A is a better project than B, correct? But you are not considering the Disky and the Disco both together. Now, you please tell me the PI, Disky by Disco. 150 by 100, how much? 1.5. This you do. 145 by 80. 1 point. If you go only by discounted inflow, which one should be selected? Project A. But when you calculate PI, who is giving a better result? Project B. So that's why PI will be calculated. PI will be calculated only if two projects are having positive NPV, but outflows are different. Then better way is not NPV. Better way will become what? PI calculation. So in simple language, PI means what? What you have to do in exam? Answer, yeah. Disky by Disco. And anyway, we have to calculate NPV. So two results will come, Disky and Disco, divided by, and you will get the answer. PI should not be written in percentage or amount. It should be written in times. Up to here, everyone understood clearly, yeah? What are the techniques we completed now? 3 techniques I said. NPV, IRR, PI. In that, what are completed? NPV, PI. What is the pending one? Loudly. That's what we are going to write. Notes up to what you have written. Keep the heading. Keep the heading. Decision making techniques in capital budgeting. And a main decision making will be using these only. Decision making techniques in capital budgeting. NPV heading we said that. In that only you have to write. Decision making techniques like NPV. Heading la write down net present value. Write down there. NPV is used to calculate the net benefit of a project. NPV is used to calculate the net benefit of a project. NPV is used to calculate the net benefit of a project. NPV is used to calculate the net benefit of a project. Point number 2. NPV expresses the results in present value terms. NPV expresses the results in present value terms. Okay. Third one. NPV expresses the results in present value terms. Next one, third one. If NPV is positive, we shall accept the project. If NPV is positive, we shall accept the project. If NPV is positive, we shall accept the project. And continue, you know the remaining answer. And reject the project if NPV is negative. And reject the project when NPV is negative. Reject the project when NPV is negative. So positive NPV, accept. Negative NPV will be reject. Understood up to here, everyone? Done. Next one. Keep the heading PI, Profitability Index. Profitability Index. One line answer only, 1 point like will be completed. Write down. When multiple projects having positive NPV has to be analyzed. When multiple projects having positive NPVs have to be analyzed. When multiple projects having positive NPV has to be analyzed. To select one among them. So when multiple projects having positive NPVs, so there are multiple projects, all are having positive NPV, but we have to select only one among those. Okay, comma. In such case, PI will be used. 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 Full stop, continue. PI is expressed in times. PI is expressed in times. Okay. Below write down. Come out of both the points, write down. Formulas. Two branches. NPV, PI. Write down this. Discounted inflow. Disco means discounted outflow. DISC discounted. I means inflow, O means outflow. Shall we continue further? Now keep the heading. Most important, internal rate of return, brackets IRR. Once we learn this, we will be going into problems part and we'll start solving the questions. Right now, keep the heading, internal rate of return, IRR. Internal rate of return, IRR. Complicated than the previous two. So, understanding is required, common sense is required. Please listen carefully. Okay, write down first. Basic notes. Point 1. Internal rate of return calculates. Everyone, all the live students also, please write down the notes. This will be definitely a game changer for you at the time of exams. You need not read pages and pages answer. You read the 2 points, do the questions what I am solving now. Any question in exam you will be able to solve. What you have written, IRR calculates the maximum cost at which company can raise the funds. The maximum cost. IRR calculates the maximum cost at which company can raise the funds. Company can raise the funds for the project. Maximum cost at which company can raise the funds for the project. Okay, company can raise the funds for the project. Okay, wow. So, point number 2. Point number 2. More the IRR, better the project. More the IRR, better the project. More the IRR, better the project. Okay, more the IRR, better the project. Next, point number 2 or 3? 3. At IRR, NPV will be 0. At IRR, NPV will be 0. Why? That also we will learn now. Okay, through numbers we will see. Theoretically we can't explain that. At IRR, NPV will be 0. Therefore, IRR concept is also called as I asked you to come in, not to close the door, no problem. What I am asking? IRR is also called as break-even rate. Exam, if they ask calculate break-even rate, sir did not teach me in the class, don't tell. Break-even rate means not exactly zero situation, that's called as the break-even. So also called as what rate? Break-even rate. Break-even rate means what? IRR. Hey, IRR is not new for you. You already know IRR. Where? YTM calculation. Guess rates. Bonds chapter la. We have done or not? What we have done, remember? We will take one rate at 8%, one rate at 9%, one above rate, one below rate. We will get exactly one rate. Yeah. So you have already done. Nothing great we are doing here. But here we will really understand the meaning of what is an IRR. Clear? Sorry, okay. Now, how many points completed? 3. Fourth point. Point number 4. Point number 4. Point number 4. If funds can be raised, only at a rate if funds can be raised only at a rate higher than IRR, if funds can be raised only at a rate higher than IRR, reject the project. Reject the project. If funds can be raised only at a rate higher than IRR, what we should do? Reject the project. Come. If funds can be raised at a rate, if funds can be raised at a rate lower than IRR, if funds can be raised at a rate lower than IRR, accept that project. Accept that project. So there is a lot of concepts in this that we will learn slowly. Okay. Next, point number 1 or 2 or 3 or 4 or 5 or 5. Write down. Method of computation, underline. IRR computation method. Method of computation. Method of computation. Branch into two parts. In case of annuity cash flow, in case of annuity cash flow, in case of multiple uneven cash flow, in case of multiple uneven cash flow, in case of multiple uneven cash flow, in case of annuity cash flow, in case of annuity cash flow, cash flow per annum into PVAF equal to DISCO. Cash flow per annum into PVAF equal to DISCO. Okay, everyone? See the screen once. If you do not understand what I am saying now, you can't understand IRR concept. So listen carefully to the details that I am going to explain now. See the screen. Stop writing. See the screen. First part is what? Sum A into B is DISCO we have written. Correct? Answer. Tell me. At IRR, what will happen? Just now I told in the notes. At IRR, what will happen? Start again. At IRR, what will happen? NPV is what? Loudly. What do you mean by NPV 0? Very good. What is the answer? DISCO is DISCO. DISCO equal to DISCO. Tell me what is NPV? NPV equal to dash. Dash minus dash. DISCO minus DISCO is what? NPV. At IRR, NPV will be? 0. Loudly. 0. So NPV plus, so you put 0. 0 equal to DISCO minus DISCO. 0 equal to minus DISCO. So if you take this minus DISCO to the other side, what will happen? DISCO is equal to DISCO. That's what I have written here. See there. Cash flow per annum means discounted or non-discounted. Cash flow per annum means discounted or non-discounted. Non-discounted. When you multiply it with the present value annuity factor, this entirely will become what? This entirely becomes what? That's it. DISCO is equal to DISCO. We are doing for annuity cash flow na, single cash flow na, multiple uneven cash flow na, this one. And every year same cash flow na, different cash flow. Loudly. Therefore, IRR and NNA, this value will become the IRR rate. This value will become, and they will give you DISCO, they will give you DISCO, they will ask you the rate. That's why, read the point number 1. IRR la point number 1, loudly. Maximum That's it. Cost means what? Rate. Cost of capital, cost, rate. Okay. So PV, AFA, IRR cost. Are you all understanding clearly? Yeah. Listen carefully. See here once. See here. See the screen. Everyone. Last bench. Everyone. See the screen. Important. Tell me. Cash flow per annum means today's cash flow, future cash flow. Cash flow per annum means future cash flow, present cash flow. But we have to calculate what value? Present. Every year same or different cash flow? Loudly. Same cash flow. Therefore we call it as what? Annuity cash flow. What cash flow? Cost of capital chapter like KD computation what we have done? Year 1 to 5. Year 1 to 5. Interest 100 rupee. PV what we have done? For example, if it is 10%. 1 divided by 1.1 equal to M plus, equal to M plus, equal to M plus, equal to M plus, equal to M plus for 5 times. Then we will click MRC, correct? Then you will get annuity factor. Sorry, then you will get present value factor, present value annuity factor. You will directly put that. Same. Here present, here also same. Present value annuity factor has to be computed. Everyone understood the concept clearly? Yeah? Answer. Understood the point clearly? So now on that we are going to do the question. Before that, sir, this we have done for annuity. Now we have to do also like that for what? Multiple uneven. Correct? For this, no formula is there. What we have to do? Trial and error. Random rates we have to take and we have to start doing the answer. Up to here, everyone understood the idea. Na? I'm not asking you whether you can do problems. How you can do without me explaining? Concept you understood. Tell me, NPV la what we will calculate? NPV la what we will calculate? Amount we will calculate. PI la what we will calculate? Times we will calculate. IRR la what we will calculate? Rate we will calculate. See the beauty of the chapter. Three very, very important things. Hey, are you understanding? Tell me what are the three things? NPV will calculate amount. PI will calculate times. IRR will calculate rate. 3 dimensions we will analyze the project. Clear? Whichever project will give all the 3 best results, that project will be selected in the company. Shall we start doing the answers now? Everyone? IRR, we have to directly jump into the question and do. Then only you will understand. Shall we start doing the question answers in the exam? Enough introduction was given to the entire concept. Please keep the heading practical questions. Have you copied this IRR chapter? Okay. Now, let us take exam questions and start solving it. Hey, listen. See here. Now we are going to start with question and answer discussion in capital budgeting. Around 10 to 12 types of questions we will do. Only on NPV, IRR, payback, discounted payback, PI. All the techniques we learned till now in capital budgeting, we are going to apply and start doing the answers in that regard. Shall we start, everyone? See the screen. You are the financial analyst of B Limited. Director of Finance has asked you to analyze 2 capital investment proposals, Project X and Y. Each project has a cost of 10,000 and the cost of capital of project is 12%. Project's expected cash flows are project X and Y. Two projects are there. 0 year. Both will require investment of 10,000, 10,000. Negative line he has written means what? Investment, outflow. First year, second year, third year, fourth year, cash flows are given. Okay, everyone? Calculate each project's payback period, each project's NPV, each project's IRR. So we have to do how many questions now? 6. Every project we should calculate payback, NPV, IRR. Again repeat, payback, NPV, IRR. 6 times we can do. That's why question came in exam for how many marks? 10 marks. Okay. Read the question first. We'll start doing the solution together. I shared the question bank also, open document. Take that if possible. Take a printout if possible. Can we start? Don't create noise here, please. Shall we? Hello, I'm talking to you all. Can we start? Okay. Now listen. In the question, he asked you to calculate payback or discounted payback. Question la they use the word payback or discounted payback. If they don't use the word discounted, do normal payback in exam, or else doubt will come. Anyway, present value factor is given in the question. I need to do discounted payback or normal pay. If it is discounted payback, they will tell clearly in the question. Then only do that. Payback means which payback? Non-discounted payback we have to do. If they ask clearly calculate discounted payback, then you have to do the discounted method. Clear everyone? See the screen once. Project X ki project Y ki can we calculate payback period or not? What is payback period? Tell the concept first. Time taken for recovery of investment. Time taken for recovery of investment. Also what is the principal amount? Correct? Let us start. Keep the heading. Step 1. Calculation of payback period. Calculation of payback period. Calculation of payback period. Okay. Calculation of what? Payback period. Can we continue? Now listen. Calculation of payback period. Look here. After writing this, first listen carefully. Project X is giving annuity cash flow na, multiple uneven cash flow na. Hey, please don't irritate me here. Basic questions la. They are giving multiple uneven annuity here. Project Y is giving. Therefore, project Y just like that we can compute. Just to told na reversal, return on investment. Okay. Investment divided by annuity cash flow we need to take. That's it. Answer will come automatically. Correct? First one we need to do. Write down. For project X. For project X. Write down. Year cash flow. 1, 2, 3, 4. 6,500. 3,000, 3,000, 1,000. 6,500, 3,000, 3,000 and 1,000. First tell me one answer. How much is our investment? Loudly. Okay. First year 10,000 recovered or not recovered? Not recovered. Second year 10,000 recovered. What we have to write now? Cumulative cash flows. Hey, you know the method now. Write down 6,500, 9,500, 12,500. Last one you don't need it. Because we know that investment has recovered at the end of second year, third year it is recovered. But answer to the question. Up to here have you written? Okay. First tell me. How many completed years we have? Write down 2 years plus. 2 years plus. In the brackets you write down like this. Leave it. Working notes we will write. Put a star mark with 2 years. Please tell me, between second year and third year means how many years? 1 year. What is the extra earning we made? What is the extra earning we made? We want 3,000 difference. 9,500 becomes 10,000 with 3,000, just 500. If 1 year has taken for 3,000, 500 will take how much time? Tell ya, 0.16667 like that it came. So 0.167 years. So therefore, what is the payback period? 2.167 years. $2.167 years or 2.17 years. Anything you can write in exam. Sir, anyway, project X everyone understood? Next, keep the heading project Y. Live students also please give an answer. Project Y. So, project Y. Project Y is a normal cash flow, annuity cash flow. Tell me how to calculate for annuity cash flow, everyone. I told everyone. Investment divided by cash flow per annum. Tell me, investment 10,000. How much cash flow per annum? Tell the answer. 2.86 86 years. 2.86 years. 2.86 years. Which project is having more payback? Which project is having more payback? Why? Means it is taking more time for recovery, correct? Therefore, which is better project between X and Y? X is a better project because it is recovering principal faster than project Y. Write down there. In terms of payback period. In terms of payback period. In terms of payback period. Project X is recommended. Project X is recommended. Since it recovers the principal. Since it recovers the principal. Since it recovers the principal faster than project Y. Faster than project Y. Payback period over. Next, step number 2. NPV. Step number 2, NPV. Write down. Sir, fastly you should compute. Shall we start, everyone? Don't make any delay. First, I want one answer from all of you. See the question and tell. What is the PV factor that we need to consider for NPV? See the question and tell. What is the PV factor we need to consider? Loudly. That's it. PV is 12% rate. How many years? 4 years. Right now. Same for First for what? For project X. Year cash flow PV at the rate of 12%, PVCF. Okay, right on. Year 1, 2, 3 and 4. 6,500. Tell the answers here. 6,500, 3,000, 3,000, 1,000. PV at the rate of 12%. Please give the numbers. 0.893, 71, 797, 0.712, 35. 63, 636. 636. Multiply and give the direct answer. M plus you use. 6,500 into 0.893. M plus. 3,000 into 0.7. You know now how to use M plus. What is the disky? How much here? 10,967.5. They don't copy the answers. Everyone do on your own. 10,967.5. Everyone got this answer? Okay. What is the disco? You know, na? Already we have done. Tell me. NPV is positive or negative or positive? Right on. Okay. Next. Second one. For project Y. For project Y. Hey, everyone tell me, project Y is a annuity cash flow na, single cash flow na, or multiple uneven cash flow na? Directly we can do. Write down year cash flow PV at the rate of 12%, PVCF. Dead easy. 1 to 4 directly 3,500. You know how to do this. PV factor 12% ki 4 years annuity factor calculate. 1 divided by 1.12. 1 divided by 1.12 equal to M plus equal to M plus equal to M plus equal to M plus MRC. Tell the answer. 3 digits, 3 decimals you say. 3 point multiply. Ten 620, 630, 0.72. This is the disco. The disky minus disco. How much here? 10,000. Positive 630.72. Okay, wow. Now you please tell me which project is selected. Project A, project B, on the basis of NPV. A is giving 967, B is giving 630 for the same capital. Which project you will select? A, X or Y? Right down. Since NPV of project Y, project X is higher than that of project Y. Since NPV of project X is higher than that of project Y, it should be selected. It should be selected. Okay? Done. Next issue. So, how many we completed totally? 2. Payback completed, NPV completed. What is the third mechanism we are required to do? Right now, keep the heading. IRR. IRR. First, keep the heading for project X. For project X. For project X. Okay. Listen. For project X. We start, everyone. Listen here. Important discussion. Please listen carefully. For project X. We did not do any analysis on IRR in the discussion time because I said we will directly do the problem. Correct? Now this is the time to learn about IRR. So please everyone listen carefully, see the screen. Known concept, nothing great, but still IRR I did not explain anything through a question before. NPV I have taken one example. Payback 2 examples or 3 examples we have done. PA also 2-3 examples I have done. IRR numerically I did not explain. Now it is a time. And the beauty of this question, do you know? IRR 2 types I have written for you. One is with annuity cash flow, another one with the multiple uneven. Correct? In this question both we are going to do. Because this question has annuity as well as multiple uneven. So in one question we are going to understand entire IRR. So listening or not listening is entirely your discretion. See the screen. Project X. Multiple uneven cash flow, annuity cash flow. First give the clarity. Multiple uneven, annuity. So what method we need to use for direct trial and error? Loudly, sir. Sir, what rate we should take? Who knows? I also don't know. Anyone in this world should first take a random rate and do the calculation. What rate? Random rate. Some random rate we have to take. We will take 15% and try for the answer. But one thing I wanted to tell you, please listen to the points carefully. Or else exam you will waste minimum 15 minutes time on computing IRR by taking trial and error. Dozen rates you should not take. You should use common sense. See, I told this in the initial stages of our classes. I am again repeating for you. Listen. More the PV factor, lesser the value. Had I told you this point or not? What I said? Sorry, listen carefully. I will give you an example. I wanted to buy, say for example, I wanted to buy a water bottle from you. I want to buy 10 water bottles. Each one 10 rupee. Each one? MRP 10 rupee each one. I want to buy a pack of 10 from you. You are selling it. I said I will buy pack. I am not buying one loose packet or one loose bottle. I am buying everything. So give some discount, I asked. You said that okay, I will give you 5% discount. Clear? How much is each bottle? Answer. How many bottles I am buying? Normally what is the sale price? 10 into 10, how much? Loudly. Now I said, I will buy 10. Please give discount, I said. You said I will give 5% discount. Now tell me, how much you will receive? Answer. You gave me 10% discount. How much you will receive? You gave me 15% discount. How much you will receive? Answer. You gave me 30% discount. How much you will receive? Now what you have to understand, more discount you are giving, lesser cash flows you will receive. Are you understanding? So tell me, PV factor is a discounting factor, correct? As the PV factor is go on increasing, DISCI will go on reducing. Do you understand the point? DISCI is nothing but cash flow. What we said just now, inverse relation. More the PV, lesser the cash flow. Lesser the PV, more the cash flow. Bad response, start again. So PV factor should be always kept at a lower level to get more profits out of the project. Are you understanding the point clearly? Yeah. Everyone, more the PV, lesser the value. Lesser the PV, more the value of a project. Value means nothing but cash flow values. Shall we? Now listen carefully. Randomly let us do one thing. See the screen. See the screen. IRR means NPV should be how much? Hey, exam you are sitting here. You got these answers. Okay? You got these answers. Now IRR also have to be calculated. 8 marks question ki you will spend 80 minutes. Max 10 to 12 minutes you have to complete. Payback period will take around 3 minutes to 4 minutes. Will complete. NPV will take another 3 minutes time. Will complete. IRR should not take more than another 3 to 4 minutes max. When you will do like that, if you have practice, if you have clarity in what you are doing, see here. P factor is how much? Loudly. What is NPV? IRR means NPV should be how much? Loudly. So NPV should be 0 at IRR. Yes or no? Therefore, I wanted to make you, now you will tell right answer for me if you listen to my words. I should increase the PV factor to make this 0, or I should decrease the PV factor to make it 0. Increase, decrease. Loudly. Higher, lower. Higher, lower. Why? Higher the PV, lesser the inflow. Lesser the inflow, lesser the NPV. You are listening? So we should calculate at what rate this becomes 0. Oh, apdiya. See, we have to calculate the rate. How much we need to put there to make this 0. Okay, that I don't know, you don't know, no one will know. Unless and until we do a trial and error method of calculation. Are you all understanding? Now I will ask a question, tell me. If I take here 18%, how much percent? 18%. I will get one answer. Let us start doing. Do along with me. Keep the heading. Project X, trial and error. Trial and error. Start, please, everyone. Trial and error. Year. Cash flow. PV at the rate of 18%. PVCF. We do like this only because we have to take 2 rates. Gap is required. Okay. Tell me here. Year 1, 2, 3, 4. Cash flows 6,500, 3,000, 3,000. 1,000. 18% ki PV factors you tell me. Some are just copying the answers from the screen. Please don't do that. Do it on your own. Start. 0.847 718 608 oh 608 sorry 608 516. Okay. Directly multiply and tell me what is the DISCI, what is the DISCO, what is the NPV. DISCO I know that they have given in the question 10,000. DISCI value it will be. $6,500 into 0.847 M plus 3,000 into, you should know how to do M plus in exam. Or else you will waste time. Know how to use calculators also. $9,999. We are the luckiest fellows. Answer 18%. Almost approximated to 10,000. NPV 0. Answer is 18%. Yeah. Lucky in exam, if you get like this, you will get doubt on you. Whether I have done correctly or not. Or else why I am getting right answers. So PV is 18%. You need not doubt if really the answer is calculation you have done right and it came 9999 or 10,000. Pakka answer 18%. Don't do any other calculation. They understood clearly, everyone? See. Hey, you listen. Start. Now we calculated for which project? Project X or project Y? Now I have one question. Tell me. Say for example, in this question, I don't know, by chance 18% ka answer came. Exam like this, it may not click for us. We will take some rate. We will get, say example, 10,207 rupees came. Say example, some random number. 10,207. What you have to do? This is higher than 10,000. Correct? So, say for example, this came for 16%. This came for 16%, 10,207. So, we need to much more increase the rate. We will take some 19 or 20 or something we will take. Answer will be between both of them. You know the calculation how to do that. That also we will do. In this question, by God's grace, we got the answer directly. Sorry, anyway, NPV is 0. Now, write down for project Y. For project Y. Everyone copied project X? Okay. Let us start for project Y. Hey, listen. Project Y is a multiple uneven cash flow project, annuity cash flow project. Okay. See here, annuity cash flow, what we should do? I told you clearly. Cash flow per annum into PVAF equal to DISCO. Cash flow per annum, how much? 500 into PVAF equal to DISCO, how much? 10,000. PVAF equal to 2.86. 2.86. 86 something is there. Then 86. 2.86. Okay. Listen, I will tell you how to do. Hey, listen first. How many years is the calculation here? Annuity, okay. How many years annuity? Unlimited years annuity, lifelong annuity. How many years annuity? 4 years. Okay, now do one thing. Listen. Random calculations we have to do. Trial and error type, but very easy. Take calculator. 14% ki 4 years value, you tell me. 14% PV factor 4 years ki annuity value, you tell me. 14% for 4 years annuity value equal to M plus like that. Loudly. 2.914. Tell me now. 2.914 is more than 2.86 or less than 2.86? Loudly. So we need to take a rate which gives us answer lesser than 2.86. So we should take PV at the rate of 14, more than 14. You forgot again. See there. PV at the rate of 14 gave us 2.914. We want how much? 2. So we want lesser or more? Lesser. So our PV factor should be how much? It should be 14, less than 14, more than 14. I am asking that. Answer? Loudly. See. 14% it is 2.914. Okay. I will take 16%. Say example. It will be 2.914 or less than 2.914. Less than 2.914. Calculate. 1 divided by 1.16. Annuity for 4 years. 2.79. 2.80. Correct? Tell me 15% answer. 2.85. And almost this is equal to 2.86. So here the answer will be how much percent? Yeah. 15%. There it is, answer is 18%. Clear everyone in the class, sir? Hey, do you understand calculation clearly? Yeah. Start again. Tell me. I am trying to repeat one more time. Please see this answer once. Those who did not understand, at least listen now properly. See the screen. What is the PVAF answer we got? Just now I told you. More value you want, less should be the PV factor. Lesser value you want, more should be the PV factor. Do you remember the discussion? I want higher value, PV factor should be reduced. I want lower value, PV factor should be increased. See the screen once. Randomly trial and error basis we have taken 14%. What is the 14% PVAF answer? Sorry. PVAF answer. Tell me how much? 2 point. We want 2.914. We want 2.86. Loudly. And we want lesser value or more value? We want lesser value or more value? Lesser value. So PV factor should be increased. So we made it how much percent? 16. Then I ask you the answer, 16%. 2 point? We want 2.80 or 2.86? 86. We want 2.914 or 2.86? We have one rate higher, we have one rate lower. Correct? Randomly you can calculate for 15% also. Tell me. 2.854 and almost approximated to how much? 2.86. Therefore, our IRR should be how much percent? 15%. So, IRR equal to 15%. First of all, everyone honestly tell me, do you understand the calculation clearly? Everyone in the class? Everyone. Shall I repeat or shall I continue? Shall I repeat or shall I continue? If anyone have the doubt, please at least raise the hand. I will repeat. But don't sit idle. If you could not understand, you let me know. Do you understand the calculation clearly? Yeah. So now tell me, how many techniques they asked in the question? 3. What are the 3? Payback, NPV, IRR. All the 3 are completed. So tell me, project A, project X, project Y. Project X and project Y. Tell me, what is the NPV? Give all the 3 answers. What is the NPV? Hey, you have the answers with you. Tell the answer first. 50. Why? 630 point. Next. Next one, what we have calculated? Payback. Payback period. Tell me how many years? 2 point. Next here. Next. IRR. 18% and 15. Okay. See what he is asking. Determine which project should be accepted if they are independent. If they are independent. And independently, if you see both the projects, tell me. Selection. On the basis of NPV, which project you will select? Answer. On the basis of payback period, which project you will select? Answer. On the basis of IRR, which project will be selected? In all the 3 cases, which project will be selected here? It will be selected because it is having the better results in all the 3 cases. Everyone understood the point clearly? Now see the screen once. Forget about other calculation. First payback 2.167, 2.86. Our answers are tallying with the answers. Next 631. One project. Project X, project Y they have given. Everyone answer. Finally, all the 3 ranks for what? Project X. All the 3. Whether it is payback, whether it is NPV, whether it is IRR. Hey, IRR also see 18% and 15%. Our answers are tallying with that. Next. Now the next question. Every question should result in a new concept learning. Repeated questions we are not going to do, waste of time. See here. One question I will do, one question I will give you for work. Class learn. Because at home you won't do. Okay. See the question now. Enough of talking, please. See the question. Company has to make a choice between, again 10 marks question, please. Company has to make a choice between two projects, namely A and B. Initial capital outlay 1 lakh, 1 crore 35 lakh, 2 crore 40 lakh, respectively for A and B. There will be no scrap value at the end of life. Opportunity cost 16%. Hey, what is the opportunity cost 16%? PV factor. Annual incomes are as follows. They have given the values. Project A, project B. Discounting factor is also given. Okay. So they are asked to calculate discounted payback, profitability index and NPV. IRR need not be calculated. So procedurally it is small only, not like the previous one. But 10 marks ki why they give na? Instead of asking payback, in this question what they ask? Discounted payback. If it is discounted, they will ask like that clearly in the question. Exam, you need not break your mind. Payback na two types, discounted, normal, which one to do? Normally you do. If they wanted to ask you discounted, they will clearly ask you discounted payback. Are you understanding? Okay. See the question. How many projects we are having? Two projects. What are they? A and B. How much is the outflow of project X, project A? 1 crore 35. Project B, 2 crore 40. Both are same amount of outflow, different. So they have given the cash flows generated by both the projects and the discounting factor also they have only given. We need not do anything. Now we need to calculate payback, discounted payback. Loudly, sir. And then we have to calculate PI. And then we have to calculate NPV. Okay. First of all, tell me. Listen. How to calculate NPV? First tell me. This question, how to calculate NPV? What are the columns here? That also you have to doubt. What are the columns? Project X, year, cash flow, PV at the rate of, and PVCF. Correct? Like that we need to do for project A. Next we need to do like that for which one? Project B. If you calculate NPV, the best thing is PI also can be calculated immediately after that. Correct? Give the heading. You will do now. Calculation of step 1. Calculation of NPV. Calculation of NPV. Calculation of NPV. Write down. For project A. For project A. For project A. Why you are seeing my face? Start doing. Year cash flow PV at the rate of 16, PVCF. PV at the rate of 16, don't do. They have given in the question already. Start calculating. Can you do that or not, everyone? NPV calculation and PI calculation, can you do? Start. Live students also, please do it. Have you calculated NPV? Project X NPV, project A NPV how much? NPV of A and NPV of B. NPV of A?
5,400.
Correct? Second, do also for project B. All the live students also, you can also please answer. Tell the answer, yeah. Project B, what is the answer? 34 lakh 81,000. Check this answer. Someone got the answer as 34 lakh 81,200. 34 lakh 81,200. Computed. Have you got the NPV 34 lakh 81,200 or any different answer? Please complete it fast. $34 lakh 81,200. 34 lakh 81,000. First of all, confirm everyone got the same answer. Okay. See here once. Hey, 1 second. See here. Let us check the answer for NPVs. 58 lakh 25,000. 58 lakh 25,000. 400. And they have written in thousands. And 34 lakh 81,200. Everyone got the same answer, sir? Okay. Now you tell me what is the answer for PI? You need not do any extra amount. Na? Just a disky by disco you do. Tell me. 1.43. Sir, 43 times. Next one. 4 times. Don't copy. You do. Just I am writing answers for you to recheck. I don't know the answer. They are giving the answers. I am writing. That's all. Project A different answer came up. Disky divided by disco. Project B also you do. I don't know the answer. You gave me the answer. I am writing. If there different answer is there, you let me know. Project B wrong. 1.46. 1 point. So 1.15 times. NPV you calculated properly, PA you are not doing correct means what should I do here? $1.15 correct? Okay, see here. Hey, see here once. PI will be 1.43 and 1.15. Everyone got the same answer? Done. Now we have to do okay. Now we have to do PI over NPV also over. What is the only method that is pending for us? Payback. Payback la normal discounted. So we did not do. So let us start doing it. 1 second. Hey, listen. You need not do this again. Already NPV computation time you might have calculated fourth column PVCF. That's discounted cash flow. Again, don't do. Do you understand what I said there? See the notes you have written. NPV la how many columns you will write? 4. What are the 4 columns? Year, cash flow, PV at the rate, PVC. PVCF is discounted. So separately again, don't do it, waste your time. Start doing. Keep the heading. Calculation of discounted payback period. Calculation of discounted payback period. Write down. Year discounted cash flow, cumulative discounted cash flow. Now you understand how to do. Instead of cash flows, what we will take? Present value cash flows we will take. That's it. Remaining answer is essentially the same. Year 1, how many years life? 5 years. What is the first year DCF? First year cash flow. Huh? First year DCF how much? Oh, no cash flow. Okay. No. Next, second year. Huh? Hey, why you are telling this answer? Yeah. Are you mad or what? Just now I told you. Tell the discounted cash flow. 22 lakh. 20. 29,000. Next, third. One second, I could not understand. 84 lakh. 61,200. Third year. 46 lakh. 36,800. Next. 39 lakh. 98,400. Calculate the cumulative value. 22 lakh 29,000 plus 84 lakh 61,200. Tell the answer. What is our investment? You tell me that first. 1 crore 35 lakhs. Correct? Put that as a target. So 22 lakh 29,000 plus 84 lakh 61,200. Tell the value. 1 crore 6 lakh 90,200. Still we did not reach our target. Plus 46 lakh. 46 lakh 36,800. Answer. 1 crore 53 lakh 27,000. Now we reach the target or not? Line. Over. Now you please tell me completely how many years we have taken, everyone. 4 years. Completely how many years we have taken? 3 years. Plus brackets, so you have to write like this. So let's start. Tell me, we want 1 crore 35 lakhs or 1 crore 53 lakh 27,000. 1 crore 35 lakh. Okay, see here. Third year, fourth year. See the screen. Third year, fourth year. 1 year ke how much increase we have seen? 46 lakh 36,800. But 1 crore 6 lakh 90,000 to 1 crore 35 lakhs is not 46 lakh 36,000 na? So tell me the difference. 1 crore 6 lakh 90,000 minus 1 crore 35 lakhs. How much here? 28 lakh 9,000. How much it will take? 28 lakh 9,800 divided by 46 lakh 36,800. Tell me. 0.6061 I will write. 0.61 years. So tell me what is the total answer? 3.61 years. 3.61 years. Hello everyone, have you understood this computation clearly? Yeah. Next. This is for project A. Write down. Project B. Project B. Project B. Answer to the question first. Project B is annuity cash flow, na? Again multiple uneven cash flow. Multiple uneven cash flow. Okay. Start doing. Year discounted cash flow, cumulative discounted cash flow. First tell me what is the project outflow? 2 crore 40 lakhs. 2 crore 30 lakhs or 40 lakhs? 2 crore 40, correct? Na? Okay. Year 1, 2, 3, 4 and 5. Tell me, what is the DCFs? DCF in discounted cash inflows. Tell me. 51 lakh. Okay, next. Are you are telling cash flow or discounted cash flow? Na? Okay, next. 62 lakh. 41,200. Next. 61 lakh. 53,600. Next. 56 lakh. 30,400. Next. 42 lakh. 80,000. Tell the cumulative values. 51 lakh 72,000 total. Cumulative. Marks. Why they will give just like that? You have to do all this in the exam. Practice will make you perfect automatically. Concept everyone understood clearly, yeah? The only thing that is required is your practice. 1-2 times if you do, speed will also generate. Then anyway, tell me, 51 lakh 72,000 plus 62 lakh 41,200. 1 crore 14 lakh 30 ya 13 ya. Okay. Next again, we did not reach our target yet. 2 crore 40 lakhs now we did not reach. Start again, continue. Next. 75 lakh 800. Again we did not reach our target. Again add 2 crore 31 lakh. Still we did not reach our target. Next, continue. 74 lakh. Tell me, had we reached our target or not? Yes. That means first answer to the question, payback period, the complete how many years it is taken? Complete we have taken plus some number of years. So tell me, 1 year last year we generated 42 lakh 84,000 rupees, correct? But 2 crore 31 lakh 97,200 minus 2 crore 40 lakhs. What is the answer? 8 lakh. For this, how many years it will take? 8 lakh 2,800 divided by 42,84,000. 0.187 approximated to 0.19. So total answer is what? 4.19 years. 4.19 years. $4.19. Okay. Done with the answer, everyone? Now answer the question. Hey, everyone. See here once. See here. Finally, let us check the answers. 10 marks question. Whether we get 10 on 10, let us check. Huh? What happened? Sir, okay. Let's check the answer. NPV already we calculated. Correct? PI also we calculated. 3.61 and 4.19. Had we got the same answers? 3.61 perfect. 4.19 also perfect. That's it. 10 on 10. This is the answer how to do. Everyone, please give me one answer. Understood the points clearly? Yeah. What are all the techniques we completed? Problems also. Number one, payback. Number 2, discounted payback. Number 3, NPV. Number 4, IRR. Number 5, PI. 5 concepts we completed the questions as well. 10 marks questions. First of all, tell me, have you all understood clearly? Yeah. Answer. Yes, sir. Then do this. No. You die but do. Do and die. Not this question. I will give a good question for you. Oh, super. 10 marks. March 2019 exam. Ca&Inter. Let us see this question. These type of question, if you do, you will get more conceptual clarity. I am not going to leave you. Today we have to understand all the concepts. See the screen. Okay. See the screen once. X Limited is considering to select a machine out of 2 mutually exclusive machines. I see. Mutually exclusive, if that word comes in examiner, mutually exclusive means you can't select both. Select only one. One selection will lead to another deselection. If I select 1, 2 is rejected. If I select 2, 1 is rejected. That's called as a mutually exclusive. Acceptance of 1 will lead to, you are not listening, acceptance of 1 will lead to rejection of another. It's called as what? Mutually exclusive. It's called as what? Mutually exclusive. Okay, see the screen. X Limited is considering a machine out of 2 mutually exclusive machines. Company's cost of capital 15%, tax 30%. Okay, so what is the PV factor? See there and tell. Answer. Very good. What is the tax? Other relevant information. Machine 1, machine 2. Cost, expected life, annual income, before depreciation and tax. Hey, very important. Expected life given, cost of machine given, can we calculate depreciation per annum or not? 30 lakh divided by 10, 3 lakh. 40 lakh divided by 10, 4 lakh. This income is before depreciation or after depreciation? Means what? 12,50,000 is simply to understand EBI TDA. Repeat what I say. Earning before interest, tax, depreciations and amortizations. Repeat. For project analysis, we want cash flows, earnings. Answer. Now tell me, EBI TDA minus, first what we have to reduce? Depreciation. What you have to reduce? What is the depreciation on machine 1? What is the depreciation on machine 2? Super. Next, second bit. Continue. EBI TDA, interest anyway not given in the question. So EBIT minus interest 0, EBT minus how much is the tax rate? 30%. Reduce it. EAT will come plus what we have to do? Depreciation. Then we will get cash flows. On that basis, we need to do the competition. This is what I said to you at the beginning of our NPV discussion, if you remember. This is how questions will come in exam. This question came for 10 marks in May 2019 CA, final CA, inter exams. Shall we start doing it? Let's start. Why we cannot do? Yeah, we can do any 10 marks question that comes in exam. Just to focus on the concept, start doing it. First one, step 1, calculation of depreciation. Do it. I will only dictate you the answer. You will only give the answer properly now. Start doing. Calculation of depreciation. Did they tell anything about the method of depreciation? No. Therefore, take SLM. If they don't, they gave a. If they give, super. SLM. Even if they don't give, but life is given, assume that it is on SLM basis. Start doing it. Calculation of depreciation. Underline. Particulars, machine 1, machine 2. Particulars, machine 1, machine 2. Fast, fast. Particulars, machine 1, machine 2. Okay. Below. Cost. 30 lakh, 40 lakh. Cost. 30 lakh, 40 lakh. Below that. Life. 10 years, 10 years. Life. 10 years and 10 years. 10 years and 10 years. 10 years, sir. Okay, 10 years and 10 years. Below, write down depreciation per annum. Depreciation per annum. Solving answer. 30 lakh divided by 10, how much? 3 lakh. 40 lakh divided by 10, how much? 4 lakh. For this, they will give 1 mark in exam. 10 marks directly they don't give for final answer. Step by step they will give the marks. For this 1 mark they will give. Next, step 2. Step 2. Don't delay. Start. Step 2. Calculation of cash flow per annum. Cash flow per annum. Underline that. Calculation of cash flow per annum. Underline that. Particulars, machine 1, machine 2. Particulars, machine 1, machine 2. Particulars. This you do properly. Hey, listen. That income is after depreciation or before? Loudly. Before. And what you have to do? EBITDA. Write down. EBITDA. What is the full form? Before interest, tax, depreciation, amortization. Amortization will come for intangible assets. For example, in the company, patents are also there. Patents will have amortization, not depreciation. Clear? What you have written? EBI, TBA. Both sides. Write down. 12 lakh 50,000, 17 lakh 50,000. 12 lakh 50,000, 17 lakh 50,000. Okay. Minus. Now you tell the answer. First, what we need to reduce? Depreciation. Minus depreciation. Minus depreciation. You already calculated na step 1. Write down 3 lakh, 4 lakh. 3 lakh and 4 lakh. Tell the answer. What is depreciation amortization came out now. EBIT we got. EBIT equal to 9 lakh 50, 13 lakh 50. 9 lakh 50 and 13 lakh 50. Minus interest 0. Dash and dash. Minus interest 0. Minus interest 0. Next, interest also over. What is the next one? EBT 9 lakh 50, 13 lakh 50. 9 lakh 50, 13 lakh 50. Next, minus tax. Minus tax. 30% tax. That you need to tell. 9 lakh 50 into 30%. 2 lakh? 85,000. Tax 2 lakh 85,000. Minus 2 lakh 85,000 on first side. Next side again 30% on the 13 lakh. 4 lakh 5,000. 4 lakh 5,000. So calculate EAT. 6 lakh 65,000. 9 lakh? What is that 9 lakh 45 and 6 lakh 65? We want EAT a cash flow. What we need to do for that? Add back the depreciation. Add depreciation. 4 lakh, how much? 3 lakh and 4 lakh. 3 lakh and 4 lakh. So how much is answer? 9 lakh 65,000. 12 lakh. 13 lakh 45,000. 13 lakh 45,000. That's it. What is the step 2 we calculated here? Cash flows. Hey, listen. 1 second. This answer gave us annuity cash flow na multiple uneven. Annuity a multiple uneven. Hey, see the answer here and tell annuity a multiple uneven. Annuity, same year, same cash flow for 10 years. This is annuity cash flow question. Here, So, till now we did not start with the answer. Till now we calculated only what? Cash flows we calculate. That's what I told her. How LTV they will ask in exam. Like this only they will ask. Okay. So now we completed what? We completed only computation of cash flows. We did not complete any of the questions. First see there. NPV and PI let us do first. Payback we will do at the last. Payback a discounted payback. Okay. That question also we are going to do. First one. Keep the heading. Calculation of NPV. Step 3. Step 3 or 4? 3. Calculation of NPV. Calculation of NPV. Start doing the calculation NPV. Hey. Annuity cash flow. Directly you can do 5, 10 years you need not write. 1 to 10 directly you can write. Year cash flow PV at the rate of, what is the percentage given here? How much percentage? 15. Sir, all the live students, please reply. Are you all following? Year 1 to 10, cash flow you got the answer, some amount. 9 lakh 65,000. PV at the rate of 15%, annuity value for 10th year. 10 years. 1 divided by 1.15 equal to M plus for 10 times. Value 5.0. Ah, 5.0. First one is 5.018 PV factor. 5.018. Multiply to that. Get the answer. 5.018. 3 decimals always. PV factor na 3 decimals. 5.018. How much? 48 lakh 43,000. 111. What is that NPV or DISCI? What is that? DISCI. From that what we have to remove? Cost of machine. That is DISCI. Minus DISCO. 30 lakh. NPV. Positive or negative or positive? 18 lakh 42,370. Everyone understood here clearly? Yeah? NPV over machine 1. machine 1 ke over. Next, in that second part, machine 2, please do that fast. Hey, tell the answer. What is the NPV? Second one, what is the NPV? 27 lakh 49,210. And now tell me, whose NPV is better? Machine 1 or machine 2? Machine 1, how much is NPV? Machine 1, 18 lakh. Machine 2, 27 lakh. Whose NPV is better? Machine 2. Next. How many steps completed? One step completed. NPV we completed. Correct? Next one. Keep the heading calculation of PI. A PI calculation 1 minute you have to do. First, write down calculation of PI. Particulars machine 1, machine 2. Particulars machine 1, machine 2. Steps properly you write down. First disky, next disco, third step PI. Disky, disco and PI. Disky. Write down the answers. You have already done for NPV competition. Yes. What is the PI you got for machine 1 and machine 2? Everyone tell me. Machine 1, 1.61. Next one. Okay, have you got these answers, everyone? 1.61 and 1.69. Everyone got the answer? Okay. See here. Let us check our answer. 10 marks given in exam. Please see. First answer is payback you leave. First NPV. See here. See the screen once. Cash flows, let us see. Have you got the cash flows as 9,65 and 13,45? Wait a minute. Okay. 9,65 and 13,45. Have you got the same answer? Annual cash flow. Clear, everyone? How many years is the life of the project? 5 years. How many years here? 10 years. They have done the answer as per 5 years. This institute. Forget about their answer. You got the two answers, everyone. How many years is a life? 10 years. Okay. They gave for 10 years. But they gave the years only for how many years? Lovely. Question there is an inconsistency. Data they gave for 10 years, but answer they have done as per 5. But we have done both answers as per 10 years project or not. Go by your answer only. That's why we need not even check here. So NPV and PI, both the answers, everyone got the tallied answers or not? You please tell me. I will write here. Tell me NPV how much? 18 lakh 43,000 111. Next. $200. First tell these two answers. Both these answers, whatever I have written on the screen, everyone have got these answers. Institute has done in a wrong way. Question they have given for how many years? 10. Answer they have done for 5 years. So leave it. Definitely answers won't tally. Leave it. You need not even follow that. Next. Profitability index you got how much here? 1.69, 1.69. Because obviously when they take 5 years, different answer will come. So 1.61 and 1.69. Final touch listen. We calculated NPV, we calculated PI. The only thing that was pending for us is what? Discounted payback. You know how to do discounted payback. You can take separately or you can take even on annuity basis. Okay. See here. Today we have completed understanding 5 different concepts in capital budgeting out of 8. What are the 5? Start again. First one, ARR. What is ARR? Accounting rate of return. Second one, payback. Third one, discount and payback. Fourth one, NPV. Fifth one, IRR. Next one, PI. How many models are completed? 6. Still we are, listen. Still we are having 2 models. EAB, EAC, one model. Modified NPV, modified IRR, another model. Clear? If these are completed, entire concepts will be over. But modified NPV, modified IRR, EAB, EAC. Next class through question answers only we will learn directly. After that, 10 different kinds of questions we will do in capital budgeting. All 10 marks questions. Before you pack the bag, see here. See here. Problems we are going to solve now. They look like this. Question number 11. See, like this big. Hey, listen. Like this bigger questions when they came in exam, those type of questions we are going to solve. This one, 11, 12. See, this is how they will ask the question. 13. Small questions. 14, 10 marks, May 22 exam. 15, a small question is there na? 16, very small. 18, all these kinds of questions we are going to solve. So, hey, listen. Again, we are going to have, if you listen, I will tell. Please, if you shut your mouth, I will continue. Listen. Tomorrow's session, we will close this capillary bursting by doing another 10 to 12 different types of questions. In that 6 questions, I will take very big questions of 10 marks. Remaining questions are normal questions which came in exam. A blend of totally around another 12 questions we will do. So total around 15 questions on a big scale we are going to do in this particular chapter called as capillary bursting. After that, question bank is there with you. You need to just go on practicing at least 1 question a day. Big questions, just you need to practice. Concepts, I will cover everything and I will do all good questions that came in examination. After that, question bank is there with you. You just go on doing the practice of this particular things. Everyone clear to the point? That's it. Okay. So tomorrow's session will meet and complete capillary bursting. Thank you very much.